Yo, 365. You guys hear me? Mic check, mic check. Good afternoon, ladies and gentlemen. Welcome to another 365 Trading Academy War Room, where I walk you through some setups, buy setups, sell setups, do nothing setups, take profit setups, break even setups. This is War Room number 69, and today we are going to do something important. Something that I generally like to do after every 10 or so big swing war rooms. We have to look back to the past, adjust some pending orders, see if what we had mapped out before was working, and if it needs to be adjusted, where the adjustments need to be. And so today's war room will be a little bit, a little bit detailed, right? And the second part is we are very much knocking on the third financial quarter. Summer markets are starting in about 72 hours. We must be fully prepared for that. So there's a war room today, war room number 69. There'll be a war room tomorrow, war room number 70, and maybe another on Tuesday. I want to make sure that all assets are covered. I want to tighten our belts, right? And I'll let you know exactly what I'm doing, the positions that I have, if there are any swing trade ideas that I need to give up on, because summer markets are very slightly different, right? When hedge funds take a break, when we start to get thin liquidity in the markets, we genuinely have some problems already in a problematic market. But this is how the markets closed on Friday, right here in front of us, folks. Markets had a beautiful green closing, right? And there are many reasons as to why. I was of the mindset to do a separate video about that, a separate video about what was going on in the markets and why things are all green. And maybe I'll bring into the fold a couple of things, right? But the main thing, right, why all these screens are green, specifically in the equities market, right? So just so we're clear, if you're new to our war rooms, we're going to look at NASDAQ, we're going to look at S&P 500, we're going to look at some crypto, we're going to look at currencies. We do what we can with the limited time that we have. But when we're talking about equities, which is the stock market, which is why your NASDAQ 100 and your S&P 500 and your US 30 seemingly are starting to do a little bit well, we have to look at the reasons why. And the main reason why was, core CPI came in at about 4.9%, which is actually lower than the inflation reading we've been getting for the last 2 months. And so when that was set off, markets just went a little bit crazy happy, right? Because you have to think about it this way. Markets are now of the belief that maybe, just maybe, power might actually start to slow down with the inflation, with the interest rate hike, right? Because remember, the interest rate hike keeps going up and up and up. And there was a projection of 3 more 50 basis point hikes in June, July, and in September. And with CPI, with the core inflation really that we got on Friday, almost reflecting a cool down, all right? That seems to have signaled to the markets that maybe what the Fed is actually doing is helping this here, core PCE price index, right? What the Fed is doing potentially might be helping, what the Fed is doing potentially might be slowing down inflation, and therefore, to a lot of market participants, it signaled that maybe, just maybe, the Fed might actually change their mind. Instead of coming in at a 50 basis point rate hike in the next meeting, they might actually come in lower, right? How do I know this? It's simple. I went to our Fed rate investing tool, and you'll see it right there, right? I do apologize. I seem to be experiencing some slow internet, but shouldn't stop us, right? So we know that currently right now the Fed fund rate is about 1%. Given the last interest rate hike put us added another 50 basis point or 0.50 increase to the interest rate. So we're on a solid 1% right now, right? And this is literally the Fed trying to correct the mistake that they created during the printing of the money in 2020. Oh my goodness, kill me now, slow internet, right? So that's what's happening. And ever since this core PCE data came out on Friday, there's been a decline here. So a lot of people are now focusing. You can see literally 97% of market speculators believe in 2 weeks' time, during the next Fed rate decision, the interest rate will be between 1.25 to 1.50, right? So and remember, right now it's already at one full basis point. So which means a lot of people are pricing in a 0.25%, your Fed rate hike. But definitely, a lot of people are feeling like there's no need for the Fed to be this aggressive. There's no need to go a full half a basis point for the next minute. So it's got interesting implications in the market, and one of them is, your equities markets get to breathe. They're like, okay, cool, thank God, like, let's all just take a breather. I don't know what's going on. I think my little boy is playing video games on the other side. So I do apologize for some lag in the internet. Welcome to Africa. But I think we've got enough to get by. Right. So we had a very strong green day on Friday. We had a following green day, I think the day before. After almost what felt and seemed like a 2-week range in the markets, right? So in today's war room, while I wait for my tab to kind of like behave, I'm going to be looking at a couple of things. I'm going to look at all the currency indexes first. It's very important you have a routine that caters to this at least every 10 war rooms, all right? So this is war room number 69, and I want to do this today than tomorrow, right? And the idea is, 10 war room is just a ballpark number for me, because 10 war rooms normally would represent 10 weeks. So you want to always look at where are my currency index points, right, every 2 months, right? So we're going to look at AX for the Australian index, SXY for Swiss franc, BXY for the pound, JXY for Japan, CXY for CAD, EXY for euro, the dollar DXY, the New Zealand or the Kiwi dollar ZXY. I'm going to talk Bitcoin and NASDAQ first. And then after we're done analyzing and understanding where the market is, we're then going to slowly start moving to EURCAD, pound Swiss franc, pound NZD, pound USD, AUDCAD, USD, China yuan, the S&P 500, US 30, gold, AUD USD, USD CAD, USD Swiss franc, Euro USD, and Euro pound. And there'll be different things that I actually want to point out in each chart period. So that's kind of like what I want to do today. Show you where I'm going to be buying and selling using our same as always accurate system of supply and demand. We can discuss a few smart money concepts, but I really like to keep the swings, clean on the daily H4 time frame for clean market direction. But if you check the sentiment here, like stocks could build on the gains in the week ahead as investors await Friday's report, right? So this coming week is important, traders. It's a short week, number one. Monday is a holiday for me because Monday is a US holiday. It's a banker's holiday, so markets will be thin and dry on Monday, which makes this a 4-day trading week. But it also, remember, Friday this week is NFP. And generally speaking, when you have NFP in the markets, you are bound to get choppy markets leading really towards that, right? So you have to really kind of like pick your trades very carefully this week. Day traders, especially you guys, swing traders, you got to manage your pairs on your positions if you're in any, and if not, just really think 3 times before you just jump in. Now, if Monday is not a full trading day because of or anyways, for me, it's not, because it's just thin liquidity, right? And Tuesday begins, and I think we're going to see a lot of choppiness in the markets, anticipating NFP. Remember, the first big reading we're going to get is going to be Wednesday afternoon when we get ADP. All right, am I right or am I wrong? I don't see ADP. Is it not this Friday? Yeah, NFP is this Friday. I am right. So where's ADP? Right. So normally before, oh, there we go. There's ADP. So ADP this week is on Thursday. All right, there we go. Right, because Monday is a public, or not a public holiday per se, but it's a banking holiday in America. ADP is not going to be the usual Wednesday. ADP is going to be on Thursday. Right. There's not enough time at 24 hours to make very critical adjustments. So just be mindful of that, right? And maybe during the week, I'll put out a note to come to you guys Thursday night, maybe do a short live Thursday night. We're going to discuss what we found out and what we learned about ADP so as to help us predict accurately what we think is going to happen in NFP. But once again, some alarming differences already. ADP believes, given the miss that they had last previous month, where the focus was 382K, but they only got 247. Now they're trying to kind of like get a better prediction, a higher prediction than before, right? So they're gunning for 295K, right? Which is quite interesting, right? So the focus is ADP believes they're hoping to get about 295K. And remember, guys, every time there's a mismatch here, when ADP gets it wrong there and gets it wrong there, and just like this weird awkward equalizer, and this was a very big miss. It's not so much to say that they're incompetent and the statistics gathered are incompetent. It's more for us, it's about, well, if these market speculators, if these professionals can't get it right, it spooks the markets. I want you to get that. It creates a lot of market uncertainty, right? So if we get CPI data reading and the forecast is 0.3, but markets come out hot, the data comes out at 0.5. That is what we trade, that volatility, that fear, or that enthusiastic excitement, right? So that's why these readings can be very, pivotal, right? But I like looking at the difference between the NFP and the ADP sentiment. We come to these things many times. You will know I'm big on this. If ADP is correct, it's just clear a win or very easy way to see this. ADP finds 295K jobs, and we get this information on Thursday, and we see that the forecast for NFP is slightly higher, right? The forecast for NFP is 325K, right? So if ADP gets the 295 plus, so let's say ADP comes out with 330, 320, 325K jobs on Thursday, it's almost not a given, but you would not be crazy to assume that NFP is going to be very positive. NFP in the previous month came out at 428K, and their focus was 390. So the markets beat the forecast. The markets are creating jobs in this crazy economy, in the face of recession, in the increasing increment fears of inflation. Powell seemingly is still okay on this front. Powell, the Fed chair, only cares about maximum employment and pulling down the inflation numbers, right? And so now this particular month, or this coming Friday rather, we are seeming to look for a 3.25 reading on the NFP. And so I'm saying, well, we'll talk more about it on Thursday this week, but just be very mindful about that. Right now, apart from that, in terms of the economic calendar, if I'm not mistaken, there's a little bit of CAD news. Yeah, there we go. So there's some big CAD news on Wednesday. Otherwise, I expect the markets to be very calm, very even killed until Thursday and Friday, right? So we're gonna have some volatile changes, right? So what I like to do, generally speaking, is kind of like look at market sentiment before we start doing our analysis. We are supply and demand traders, but we understand that the intrinsic value of where price is right now is based on a lot of things, the fundamental core of that asset. So market sentiment helps us navigate that. And then we know for a fact that markets, especially the stock market, but in fact, through supply and demand, we use the markets as a future pricing in tool. That is, we don't really care where price is now, we care about where price is going and where price is going to turn, because that's when and how we maximize our profits, right? So real quick, so everybody wants markets to continue this crazy high, right? This recovery, but this recovery, guys, is so fraudulent in many ways. For me, all right. I know for some of you, this is all you see in the markets. This is what you've been wanting to see, right? Green on Nasdaq and S&P 500. This recovery is interesting. Why is it interesting? You may ask, because we finally have a decoupling, a separation from equities and crypto, but it is not the decoupling that most market participants want. Most participants want crypto to become a hedge so that when things are bad in the equities market, for example, stocks, blah, 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 when Nasdaq is falling, when my shares in the S&P 500 and Tesla are falling, I go buy crypto as an inflationary hedge. That was the original argument of this stuff. Well, we finally have a decoupling, but we noticed this Friday, or at least I noticed this Friday. I noticed over the weekend. I thought maybe it was lagging behind, but I found this so interesting that Friday and the days before that, maybe the Wednesday and the Thursday, as the Nasdaq kept climbing up from this area that we marked out in all these war rooms we've done before. I've put out a video. I've explained why this would be a big deal. One of my students brought it up. There's just been so much content around this weekly proximal line, the weekly demand, the end, at the very beginning rather, of the uptrend channel that has been removed by price, right? So there's a lot of positive buy focus there. And finally, we started to see those buy orders trickle in. And just as markets were paired, married from December, guys, literally October, September, December, as NASDAQ was falling, Bitcoin was also falling. Now we get this very strong correction that breaks out of all these micro, consolidations. This short to mid-term time frames where price was just either going down or consolidating sideways. And here comes Bitcoin not moving an inch. Maybe it's moved today, right? So maybe today, Sunday, it's already moved, and then all of this is a waste of time. But for the most part, we are not convinced, right? Look at this. Bitcoin still maintains its accumulation period, right? It's like, nah, I'm going to wait. I'm fine. I'm going to wait. And as I wait, please take careful note. I'm waiting, trending slowly to the downside. Now, I've seen markets many times do something like this. And as they do that, break up to the upside, right? Most pattern traders will tell you that. But this for me is interesting because this decoupling of markets where equities are starting to go one way and crypto is breaking to the other side is going to take us back to our original format of analysis where you analyze these assets individually. All right, so now your trade here doesn't have to be bound by a trade there. A beautiful sell in the Bitcoin chart won't always marry a beautiful sell in the NASDAQ 100, and that's particularly fine. But I want us to know that there could be a deeper meaning. It could be that, NASDAQ and all these S&P 500 things that are rallying right now off this news of a potential slowdown of inflation are simply rallying to very strong sell points, and they will soon catch up with Bitcoin that is still, for me, very much in a bear market, very much, playing around with this psychological support and very much begging to go to the downside, right? So with me, I make decisions fast and I change them very slowly. I wait for market data. There is nothing when I look at Bitcoin that makes me believe it is time for Bitcoin to go up, unless if the whale literally bunker down the zone and use their money, lots of their money, lots and lots, not to create a fake out, but to create a real strong demand. They have to construct a demand with their real money, and that demand has to be strong enough to catch price where it is right now, and then we can then agree. I can then agree that bear market is coming to an end, and we're now moving to the upside. But for the most part, my resolve is not yet shaken. And I'm not in a rush. Like I gain nothing by just changing sentiment. I do what the markets tell me. Markets told me they broke a demand a long time ago. Markets created a fake demand here, not a fake demand. Sorry, mitigating demand, a bandage, so to speak. Added more buys. Markets rallied. Markets came back to this area, and we spoke about why it was always going to come down to 30,000 mark. 30,000 mark failed to defend Bitcoin. Bitcoin really tasted what it would feel like to go all the way to 25K. And I promise you, heaven's door, is very far, and hell's gateways are knocking at about 20,000 US dollars. And that's my midterm to long-term macro analysis. That time period I'm talking about when I say midterm to long-term covers most of 2022, right? So midterm is several days to several weeks. Long term in the markets, we're talking about months to a year. And I'm saying between June, up to the end of the year, I wouldn't be surprised if we get some type of movement, but eventually end up there, right? And I'm happy to say I was wrong, and I'm happy to publicly change my mind when the data tells me to do just that, right? So as far as introductions goes and warm-ups goes, those of you who are viewing this video and I still have your attention, you have not escaped me, you think there's something of value, please don't forget to like this video. Let's get to work, right? So oil is still above 115 bucks, right? And you guys, I'm not gonna keep beating a dead horse. This is recession. The people are going to tell you that we survived it. We bumped into it. It's recession. Down on the link down below in the description box, please check out my latest blog. It's written their latest blog. I literally wrote it on Thursday or Friday. Friday actually when it became public. I wrote it on Thursday, and I talk about this. I've studied the market, the 1974 period, the 2000 crash, the few crashes before that, the 2018 after the great 2000 crash, the 2008, and then 2018, and then 2020. now on 2022. And there's something about oil reaching these levels that definitely always confirms one thing. And there are many things, there are many interesting things that you kind of like need to kind of like value and not ignore. All right. Number one, whenever oil prices go crazy above $100, recession is generally the after effect. Gas goes up, food goes up, fuel goes up, and you see it over and over again. Supply chain issues, believe you me, in 1974 were a problem like they are in 2020 and in 2022. Federal rate hikes in 1974 were the same as right now, where markets had literally seen a very chilled Fed Reserve, and all of a sudden an aggressive federal rate hikes, and things happen very quickly. When I started this thing in preparation for Sunday, today's war room, but also just in general in preparation for a lot of the reports that I have to do at the end of this financial quarter, including my Wealth in 3 Years financial program that I run for retail traders, but also for the corporate guys, I realized, it brought me, to Preacherman Ecclesiastics. I don't know if you guys know about it, Mr. Ecclesiastics back in the day, but he wrote something quite interesting. He said life lacks variety and interest, right? And in here he was talking about the monotony of life, that everything is a repetitive cycle. And I think the way he ends that little passage is, there is nothing new under the sun. I want you to know that. I'm bringing that up for one reason. The way markets circulate and move is not new. These are repetitive cycles. When you study the cycles, you can study the opportunity. When this happened and that happened, we need this to happen for that to happen. Markets, human beings, life in general is a very tedious, monotonous cycle. And I think when Preacherman Ecclesiastics maps that out, he does it in a very pristine, perfect way. He says that which has been is which shall be again, and that which has been done is that which will be done again, for there is nothing new under the sun. And right, so when I say study the charts, that's what I'm saying. Find these things, right, so that you are not caught off guard, right? So enough of the introduction. Let's start with our currency indexes, right? So we looked at the Australian index about 9 war rooms ago. The last time we looked at this thing was in war room number 60. Everything on our channel is well documented, well labeled. So if you go through war room number 60, was the first time we drew all these zones, and we spoke about how there's going to be a supply somewhere here, and the AUD was going to come crashing down, and that this was our believed target. And you can see since then, right, AUD has come down. We've got some strong retracement, and I do believe we're still on our way down there. Why is the currency index important? Well, because you want to know its relative strength as it stands alone and competes with other currencies, right? So it did see, we have here on the weekly time frame, I am on the weekly time frame, a very good supply. So this was the real target here, right? A very, very good supply. Markets gone for that particular supply, right? There were many along the way, but markets did fall. All right, so markets almost listen to this lower supply, but you can see with a very powerful wick, markets move to the take out anything. You can't trade this, or I don't have a broker that would allow me to trade the Australian index, right? So you wouldn't have lost money with your stop loss here, but it's a very good indicator to know that if there was, right, they really tried to push this index as high as they could before flashing it down. And now all of a sudden, you can see break of market structures along the way as price keeps going down, down, down. And I do believe there's going to be some type of, very well priced in weakness for the Aussie, right? The Australian dollar, right? On the governing time frame, we get this sitting. And I can't help it because I look at charts all the time. And sometimes, these patterns, this formation starts to show up. This is what NASDAQ looks like on the daily time frame right now. It's got a couple of, bearish engulfing patterns. It's got somewhat of a trading, consolidation zone, and markets are now moving forward to retest this. And like I said, I do believe we're going to see this index in war room 80, 10 war rooms from today. We'll be back again, and the Australian index might have finally broken out of this. And just so people don't think I'm making stuff up, take a photographic memory of this daily engulfment, price daily engulfment, and then have a look at the NASDAQ 100 or US 30 or the S&P 500, because one thing all these assets have in common is that they are risk sensitive, right? So if you look at your NASDAQ 100 on the daily time frame, there we're looking at the Australian index on the governing time frame. But if you look here on the daily time frame, I'm just trying to get my chart in order, right? You will notice the exact same pattern exists right there. All right, the exact same pattern. The square, this rectangle, you're bearish engulfing, bearish engulfing, bearish engulfing, and then markets coming back for a retest, right? So that's why I'm saying, you know, it's if once you spend a lot of time with the chart, a lot of these things become very clear. What moves together, what doesn't, what are risk, sensitive, assets, etc., etc. Right. So for the Australian dollar in general, because we're going to look at a couple of Australian pairs today, we're going to look at AUDUSD. I think that's what I've mapped out for today. We're going to look at AUDCAD. That's also what I've mapped out for today. But it's just important to remember that for now, medium to long term, we're still seeing downside, right? The Swiss franc index, which is SXY, right? We looked at this a long time ago. We looked at this downward channel. This is yellow, right? So it was not a good place for markets to find some footing. And you can see markets definitely, dug through it, right? Definitely dug through it. If this was a demand, in my humble opinion, the demand is now broken. Markets even went a little bit lower, but if that was a demand there, I would argue that that demand is also now broken, and we now need to investigate if this was actually a good place for markets to buy from or just a temporary pause. I'm going to go with Hakinihashi so I can see as clear as day, and you can see here demand has been taken out, and so we might be, I guess it is tempting to argue that this is now a nice flat demand and all that kind of stuff. But in my humble opinion, as long as that long-term dollar bull run perspective isn't changed, then we can continue to see some weakness on the Swiss franc. In fact, that's the kind of announcement it's making when it takes out a governing demand, right? If it removes the flow, we can only go lower, right? The next index, I don't want to spend too much time on these indexes, but I do want to keep refreshing our memory about what they mean and where we are. Right, we've got the pound here, the British pound currency index. Give me a second while I center my charts. Hope you guys are doing good, man. Hope you guys. I've actually been a little bit MIA, not working. If truth be told, I have done nothing but enjoy my family, enjoy some time off. I felt it was well deserved. I'm about to start doing live classes. I've got a crypto program coming out. And so I suspected if I didn't take the break that I just took for the last 2 weeks, I would enter that phase of my life completely burnt out. Last year, I did 3 live intakes. On this year, I only want to do 1 or 2. And then next year, just do 1. And then moving forward, so when the announcement comes for live intakes, if you've already joined 365, you know the rules. That's always free for you. You just show up and you learn for weeks and weeks on end. And those of you who joined before are part of that group. But once you join after, then you have to pay the premium price. Number one, number two, because of the time and preparation put in. So I'm very looking forward to the 1st of June. That marks a different chapter in the academy with the new site and a couple of things I'll be announcing this week. But it was important. So it collided with me being in a state of euphoria and making a good withdrawal anyways for the 2nd financial quarter. First time sharing some profits with the public. I don't really like doing that kind of stuff, but it was just important to teach you on euphoria. Like, find your number, know what it is and how it can affect your trading. Right. So we marked out some zones there, it seems, on remember last time we were here was about two months ago, 10 weeks ago, give or take. Right, and the pound has completed, right, from supply to demand. It's like completed its cycle. And it is not surprising then that you're going to see pound USD, pound this, pound that, a little bit strong right now, right? We are of the mind, we cannot forget that the British pound in general is a risk-sensitive asset with a sell profile asset, and I teach on that kind of stuff in many other videos. And so, we don't know how long this will hold, but, for the next few days to weeks, we can expect a little bit of upside momentum on pound pairs. right, as price starts to climb, right? It gets a little bit tricky when the currency arrives at a very, very secured, situated supply zone. That is a very good, healthy imbalance and meets most of our rules. And then you might start to see some reversals in the charts. And I'm pretty sure when we look at pound USD, pound Swiss franc later on in this video, we are going to actually see some mirror connotations to an upward movement, this week and maybe next week into specific supplies. And again, this is all hinging on continued dollar weakness, which we spoke about a lot in the public Telegram group. I warned you guys, dollar's going to break a short-term trend line. Then I warned you guys, don't buy it at H4. The first H4 you see, I think I've been very, very communicative about dollar and the price of the direction of dollar. Right, there we go. Another one that we've been very vocal about is the weakness of the Japanese yen. And why do they want a weak currency, and how do they make money from such a weak currency? And we can see now there is no bottom. I don't know how low it can go, right? I do expect the governor to slowly start to address this maybe sometime in October. So look out for the Bank of Japan. Actually, just look out for them starting from the second financial quarter, right? While this can keep the economy growing and international businesses blooming, there is also a specific level where your currency just can't take a beating anymore. And we want to be very mindful of where that level is, right? So it'll be nice, not nice if you're holding trades like me, like pound JPY, euro JPY. If you're still in those trades, then you just want this to keep falling. But at some point, it'll be nice to see some type of retracement recovery before another deep plunge, right? And we can see that the month of May closing in the next 2 days has introduced a little bit of strength in the Japanese yen, right? And if the Bank of Japan is really steadfast in maintaining a very weak currency for its economy, then this might not even make it all the way up there, right? In fact, the retracement days might even end somewhere here. How do you get good confirmation of retracements? I've taught this many times before, public lectures on my Facebook channel, on the YouTube channel. Just use a simple tool like the Fibonacci and make a very, very good decision, right? So we've got, a PCP level here, right? So 38.8% and the 23%. Our PCPs, what are PCPs? Potential continuation patterns. That means there is a high potential that when price arrives somewhere inside here, the continued pattern will persist. What is the pattern? Well, we consolidate a little bit, then we drop again. And so it might not be too surprising that markets will come up here and then start to fall. Premium sells, though, happen all the way up here at that golden ratio. It's 61.8% up there, right? But for the most part, the Japanese currency index to me seems weak and should continue, in that particular path with a couple of well-planned, easy to predict retracements on board. Right, then we got CAD. CAD, who is very much paired to oil. So I've spoken to this before many times. I'll bring it up again. If oil is doing well, there will always be some general strength in the Canadian dollar, right? And we know oil is kind of like exacerbated by the war. I don't even know any updates anymore about the war. It's just, I just can't believe, in 2020 we'll still have a war and it's still continuing. I have no idea where people stand in the war, to be honest with you. And I can't really see it. Okay, the situation in Donbass is indescribably difficult. Russian forces. So they see it's just terrible. It's all across terrible, right? So CAD will kind of like keep fighting back any type of fall and bounce because oil is doing well and the economy requires that. But we had arrived at a significant supply. You can see it was cleanly mapped out between 82 and 83. You can see markets made contact, and then markets have been falling ever since, and then it arrived seemingly at what would reasonably be classified as a very good bounce in demand. And in the month of May, and markets have been, getting some type of relief from that fall from there, right? But again, I'm here just to say, go back to watch War Room 60, watch me draw these zones and see how markets have played off. That's the accuracy of supply and demand in your trading, like 10 weeks later, and our analysis is still quite as accurate. Now, looking at the euro, I warned a lot of people about the euro. A lot of people tried to buy the euro up there. I said, nope, this thing is weak and will continue to show us weakness. Euro has now literally maximized as many buyers that were existing inside this very, very low demand. And I don't know if you guys heard me the other day, but in one of the previous forums, I did say I would not be surprised if next year, towards the end of this year, we have a new low in Europe. This will be the newest low ever in this currency index, right? So Euro USD going to like 60 cents, 80 cents. It's not crazy to me. I know it's crazy now, right? That's the whole point. Like when I say these things well ahead of time, it always sounds crazy, but I'm not surprised. I would not be surprised. Not be surprised at all with that if markets would use the next 6 months to do something like this, right? To drop, right? And the fall is unknown. I don't know how low, this low, or even that low. I don't know. But I do know that this is not a good look for price. It's not an area of value that they seemingly respect or want to protect, right? But I do think for the next, short term, right, to medium term, and just to clarify, in the markets, when I say short term, I'm talking about hours to several days. Mid-term is several days to weeks. So in the short to mid-term, we can expect to see a push to the upside, right? Some relative strength there because the dollar is falling, because equities are going up, right? So for the short term to medium term, which is from a couple of hours to maybe a few weeks, we can expect some upside momentum. And that's been the case since last week already. So we're already on week 2 in this particular analysis, right? But there will come a reckoning where markets have to rebalance themselves. Now, brings us to DXY. Right, so we've looked at this pair thousands of times. I've broken it down for you. I've explained it for you. It is literally my heartbeat. I look at the dollar every single day before I start trading, right? So we had first of all, we've got a big, for those of you who are joining us for the first time today, we've got an incredible uptrend that we bought in, as smart money concept of supply and demand traders, and that I personally held, shared the results for the real account, but got out somewhere here. And I've said this many times, I wish I hadn't gotten out, after holding for about a year, but at the same time, it was a good place to get out. As long as you're following your rules, anything else is just greed. Now, I've been looking for an opportunity to become long again on the dollar, right? And I could not get in any of these parabolic structures for a very amount of reasons. On the H4, we then drew a short term. What's short term? Hours to several days. So you can see here from the 21st of April, this ended up becoming, less than a month, right? Because this is like the 21st of April, and then it started to degrade somewhere on the 15th of May. So just under 3 weeks, right? This short-term trend, okay, fell apart. And I spoke about it before we did, and I said, look out for this, because when it happens, there'll be many sell opportunities to make on a platform like AvaTrade. You can buy and sell the DXY. That's why I love that broker so much. Right, and they were, right, and unfortunately, I was not stuck in a state of euphoria, so I actually couldn't trade with you guys, but there was a beautiful gap here, supply, there was a beautiful break and retest of a trend line, anywhere from the H1 to 2 hour time frames, right, a nice clean supply, markets consolidating, markets coming back, and then markets gapping down somewhere in here, nice gap, markets coming back to test that supply, markets dropping, right? And this drop just continued religiously as the pound, as the euro took over and started to climb up, and eventually we saw equities markets enjoy that rotation too. Markets hit this H4 zone, and I told you guys, look, I'm not going to buy there. It's just a place that me and my senior traders marked out to see market psychology. If markets were to really rally from this H4 zone, we would have said the green is back, the dollar greenback is back. We would have said markets are back to pushing money to flight into safe havens. We would have also said there's something going on that we don't understand, right? So it was nice to see markets break structure up here, but then continue to the downside, right? So markets have continued to the downside, closing lower than this low, and now looking to remove this H4 demand. And this is very common with supply and demand trading. Normally, generally speaking, all the supplies and demands inside a structure that becomes broken don't tend to hold. Some do, right? But you never know which ones, like playing the lotto. Most of them look like this. They'll look like markets are going up, and then all of a sudden you have to give back all those profits almost immediately. And that's not a good way to trade. I don't want to trade where I'm always looking at charts. We cannot do that. I'm a father of 2 kids. My partner is demanding. I run a flow trader. institution with 12 traders under me whose accounts and stop losses and I need to review. I sit down with every single trader 2 hours a day, as quickly as possible via Zoom. I have my own personal life. That's my point. My point is I cannot micromanage charts. I cannot be looking at charts every single second to see if I can take profits here. If I've made $5 there and $20 there. No, I like to trade along with the trend so that I've got a good entry and then I swing trade, right? And that's kind of like the beauty of it, right? So now my opinion with the dollar, guys, is this is going to get removed at some point, number one. Number two, when we look at the greater time frame to look at, we can see here this H4 zone, this H4 demand that a lot of people are trying to buy to, that I've warned against, is simply just a PCP, a fuel in place for sellers in the markets right now, right? And then we really want to start to see what's going to happen down here. In here is the mixing of a lot of potential. Finally, we'll get reconnected with the main uptrend, number one. Number two, this is the first real daily demand, ready to catch price reacting to a daily supply at the top there. And this will be the first test for the dollar. I will definitely be trying to buy somewhere in the zone here. I'll definitely be trying to buy, some greenback into this zone, and then I'll see if I'll be successful. If I get stopped out, then I might have to reassess and then look at that 98 US dollar mark, right? So 98, yeah, 98,400 somewhere there. But for now, I'm very excited to buy here, seeing as I missed out on all these beautiful sales during my break, right? So that's DXY, and we just spend a little bit more time there because DXY is literally the heartbeat of a lot of the other assets we want to trade, right? Then we get the New Zealand currency index, right? We seem to have a broken supply, broken demand, and then markets really went all the way down, breaking trend lines. We had withdrawn a Fibonacci at some point for whatever reasons. I'm going to remove that. Right. So in front of me, I simply have a simple solution. Markets are going down. They've taken out a significant demand, and they've done their best to try and reach the lows before picking up. And just depending on how you draw your areas of value, depending on who has taught you how to draw supply and demand, you will notice that if you were to look at the drop base rally, you would note that the area of competition is and that's in my module 2, by the way, right? So we speak a lot about this peak supplies, value-based demands, all covered in the course in module 2. You realize that markets actually have made contact with that demand, and now it's up to us to really see the upturn, right? So this has been an interesting turnaround place for NZD, all right, New Zealand, from about the 13th of May, and markets have been green ever since. And very much challenging their very first daily supply, and I think that might actually be broken, and that NZD might actually have a little bit of some up days to come, short to midterm, some very strong up days up until markets get to about this level. So just look out for those type of trading opportunities. And lastly, although already spoken about here, it's Bitcoin and NASDAQ 100, which I think I've already covered, right? So as far as introductions go and our currency indexes, folks, that is what I am looking into. Like, that's what my currencies seem to be. That's what my stock market is doing. And for some reason, there is a decoupling in the crypto markets. The stocks rally like crazy and crypto stays stagnant, right? Consolidating and ranging. And at 365, we know why markets range. We know it's never random when markets range. We also know that when markets range for a very long time, there will be a breakout. There will be many fake outs, but eventually there will be a real breakout to the upside or to the downside, and it's our job to figure out which one it will be. All right, so now that we know the currency indexes and we have that in mind, I did like to look at about 15 charts with you, 15 signals, and just so you know, this is not me looking for any new trade ideas. This is me now going back to say I've done almost 10 war rooms, from war room 6, today's war room 69. Every 10 war rooms or every 10 weeks of trading, I have to go back and check to see what the hell is going right or wrong. When Mr. Kakoma kept asking me to make a video about this, and I never got the chance, and I do apologize, Mr. Kakoma. If you're watching, please just type answered, right? If you feel answered, when do we decide that pending orders are now expired, right? And Mr. Kakoma, it's a part of a process called scenario analysis that you will be very privileged to learn about this month in June, as it's in our module 3, scenario analysis. And scenario analysis involves a lot of things, but I don't want to bog you down with too much detail. But you have to remember what I used to say to you guys in module 1 all the time. Markets, specifically banks, think in 3 months. I have a 1-year profit target in a 10-year financial plan, and we've seen this play out over and over and over again. Well, if you think about it, there are 4 weeks in 1 month, so in 3 months we're looking at about 12 weeks. A lot of my stuff is around how banks think around trade. So for example, in our COT data report, we've got the 13-week moving average, right? That is not built on an indicator, because indicators lag. We base it on the average 13-week average flow of order flows that come in week by week in the COT data. Same thing with my pending orders. If markets don't make a move to the same ideological structure that I'm looking at within that particular financial quarter, right? Financial quarter, which is Q1, Q2, Q3, which if you think about it, one financial quarter is 3 months, which takes us back to 12 weeks, right? Which takes us back to that 3-month perspective. That is how long one financial quarter is. That's when I start to think, okay, well, man, between week 10 and week 13, but really week 12 for me most of the time, I start to investigate which of my pending orders has expired. Because when markets get to those old pending orders, because you've just set and forget. So let's say you set here a supply. You saw a supply and you're targeting that supply, and you set a pending order. And let's say we have a supply like that in War Room 60, right? So the assets that we're looking at today, by the way, most of them come from War Room 60 or 61. Some of the trades we're actually in, and they're doing quite well. I'm going to tell you guys what I'm doing when markets open tomorrow, Monday or at midnight, or how I'm going to either be breaking even or just taking profits and just clearing and building margin, right? Because a lot of you guys who keep buying, buy trading, like you guys are trading on margin, like especially a lot of people who keep buying, in the crypto markets. I'm talking about traders, not investors. Right, a lot of you are really, 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 really stretching out your margin. The quickest way to help margin growth is sometimes to have a good system to reinvest in your account. How do you do that? Direct deposit. You add money into your account, or you close profitable trades that look like have run their race, right? So maybe the markets didn't reach the target that you wanted, but you've gotten at least 1:3, 1:5, right? It's all about risk to reward ratio. So you put those profits back into capital, more margin, right? So let's say in War Room 6, we mapped out a supply that we wanted to get into, and markets just kept falling and falling. And then here is month 1. So somewhere here in month 1, would have been on War Room 64, 65, because remember, War Rooms are every week. And then somewhere here in month 2 would have been War Room, I don't know, 69, 70, or kind of like where we are right now. All right, so today we're doing War Room 69. So let's do it that way. Right, so 69 means 9 weeks from this, which is technically two months and a week, which is now very much getting us very close to the 3-month perspective that we're worried about, right? That we don't want trade ideas to expire. Now, along the way, when markets were falling, it is not surprising then that markets just kept creating supplies. Now, it is one thing to wait for price to eventually get to this particular supply that we mapped out a long time ago, right, before this trade idea has expired. But what happens when markets arrive at an opposing governing demand? It means that, we need to start to change our perspective of price, because remember, once again, the only thing that tickles our fancy, the only thing that we care about in the markets, the only thing that puts money in our pockets is where is market going now? Where is price going? We are not one to believe that markets are not random. We don't believe markets are random. We think human beings are random, right? Human beings are random, but price is not random. Price is never random. In fact, they tell you every week what they are going to do with price. It's just that retail traders are not equipped to read the data. They don't understand. Some of you are trading different things. But if markets all of a sudden change their mind and arrive at a point of change where demand is now in charge and supply is no longer in charge, most of your sell ideas become null and void, because immediately the direction to where markets is going now has completely changed. So if I've got supplies along the way that were created as the snipe was falling, price was falling, but never gave me a chance to enter, never fully retrace where at least I thought, then what happens is, when you start to wait at these dangerous points thinking that markets owe you something, right, you will get disappointed. So for me, pending orders, it's like a commentator else was wondering, always expire all the time when I believe, first of all, that there's been a change in where markets is going. So I look at my demand. That's why I always start with our governing time frames. The first thing you should pick up, first thing you should see, I wanted to sell here, I wanted to sell there, I wanted to sell there along the way, but now I can't because markets are buying. So now I need to start looking for demand buys, demand entries in here, and delete any of these sell orders. Because when markets get there, you will be triggered. And when you get triggered, you can't tell the markets, look, at the time it looked like a good idea. I get why it's not a good idea. Now markets will simply just go through you, because all those sellers now are exhausted or have abandoned the plan, and everyone is more likely to buy than sell at that particular time. Right, so the expiring of trade ideas is always based on the governing exchange of money, number one. Number two, also just check your time period of how long you can have pending orders on your platform, right? Unless if you have an incredible amount of capital, and that's normally for retail traders, $10,000 US and above, and you are very much good at risk assessment. So instead of using a standard lot size on $10,000 US, which would normally average at about a 5% risk, which would actually average at about $500 US per trade, for you to just forget about every single pending order, you said you'd need to have about a $10,000 US account, and you'd have to be moving at a 1% risk factor. 1%, which would drastically mean every single trade you're risking is not about $500 US, but it's about $50 US risk, which means your lot size is logistically very small. But as an army general of wealth, you're deploying many trades across, a certain forget spectrum. And if you know very well traded in clusters, you will know that your equity graph will look like this. But as long as that 10K is growing to 20K, 30K, 40K, 50K, you're making money. All right. So I would say that is a good way to think about the expiry of your assets. Right. So I want to quickly do a short-term nosedive on the sentiment before we start our Forex pairs. And again, if I've said something that makes sense, something that you like, please, it's for free. Not only that, but it helps me know that I'm doing well. I sit through, I obsess over the YouTube and analytics. I do notice that some of you drop off, once in a while because maybe the videos are too long. That particular point, I can't always change that, because content is important that is delivered in its rawest form. I am an educator for financial markets. I'm not a shortcut, make magic in 10 minutes type of guru. That's not my skill set, right? So do like the video if you like the video. Leave me some comments, talk to me. That's the kind of stuff that keeps me going. It does help the channel as well. It relocates your algorithm, so you start to be introduced to more of my stuff. And then hopefully you create a flow of market education that will help your life. Right. So China coronavirus, right? Cases outside the quarantine area. So this is getting bad. Market sentiment bad about China there. China opens the exchange bond markets to overseas investors. Okay, cool. Peak interest rates may be lower than expected as growth slowdown looms, right? So it's stuff that we're talking about with the core PCE. China property sector trend wreck rolls on. Evergrande to roll defaulted debt to new bonds. I covered the Evergrande crisis last year. I told you guys it's going to be a big theme in the housing market this year, which actually affects the market, creates a sentiment, and generally creates that bearish overhead line. And all of the stuff that we have today was priced in last time, because this is the end result of it, right? Russia paid coupons in foreign currency. Okay, PC inflation comes down and any decline is good, right? So this is the big thing that happened on Friday. US stocks end the week with strong gains, right? Because of the above headline. key events and releases for next week. I've already covered that with you. NFT is the main one, some bit of CAD news, nothing else, right? Oil at 115, looked at that already. We're going to look at USD Swiss franc together later on today, so that's fine. Weekly Baker rig count shows a fall in oil. For oil rigs, doesn't really matter. The German Chancellor supports Ukraine and until Russia stops the attack. Dallas Fed trimmed mean, all right, so that's 3.0% PCE. We've spoken about that. Yeah, Elon Musk, doesn't really matter. All right, cool. So there's not much really for me, the markets have just been even keeled, right? So let's look at our first chart for the day in terms of mapping out swing trades or managing EURCAD analysis from War Room 60 brought back to War Room 69. So let's see what we are doing, what we discussed we're going to do, and how that is going, right? So from EURCAD's perspective, you can see we've been in a very, very consistent, drop for the longest of time. We've analyzed this pair throughout last year, definitely throughout this year, and we're just here to pick up the pieces, right? So I'm going to go straight to the daily time frame. Excuse me, let me first start off on the monthly. It seems like the first logical target for the fall will be somewhere here, although this area is marked in red because it means I don't think I'll be doing any type of buying. I've just explained to you with the dollar chart that anything inside a structure, once that structure is broken, I never believe in its strength. I would much rather wait for the beginning of that structure. So if I'm to buy, I would much rather wait to buy all the way down there than buy in the red zone. Red means danger. Red means I don't trust it. Red means, this is a high risk area, right? So it's for cowboys. Cowboys take risks. I am not a cowboy, right? So that's where I would want to buy, right? But I am also very mindful of the fact that this is a very big, red zone psychological area for markets, which might have a lot of market participants, okay? Now let's go straight to the daily time frame and see what's going on, right? So we spoke about this, and you're going to notice there are a couple of trades that went off. If you're a set and forget trader like me, many trades that we discussed in the war rooms went off at the same time, right? So you gotta see these things, man. When I print my broker statements to analyze, or when I do it for my traders and give them reports about what they're doing right, what they're doing wrong, and what they're excelling in, and what they're not taking note of, you will notice in today's war room, and just in general, there was a lot of our trades that were all triggered simultaneously on the 16th and the 17th of May. All right, a lot of some charts here were triggered on the 16th and on the 17th of May. All right, and this is not one of them, but I'm simply saying, just please bear that in mind. You're going to see pound NZD. You're going to see a couple of them. I'll bring them up, right? But War Room 60 here, looking just before the month of April when it started, right? And then you'll see on the 16th of May something interesting happened, right? That bottom out effect here, which I was not part of. Right, so there was a rotation, my point here, somewhere here on the 16th, 17th of May on all charts, right? And it's quite a very, very interesting rotation. But anyways, the sell trade that we took here managed to do, I think, about a 1:5. I did not close the trade. I did because, once again, my target profit is right there. We watch markets pull back away, pull back a little bit lower, then pull back away. And it's now just a patience thing and a margin thing. Right, where price closed on Friday puts us back at 1:3. That is the distance between our entry point to this white line in comparison to the risk we are taking on this trade. Right, so I am going to be doing one very clear thing. Is number one, I'm going to go risk-free on this chart and break even. That's what I want to do first, all right? And then I want to, that's option one on the table, which I would very much encourage a lot of you who want to hold this a lot longer to swing. But I am going to then pull my stop loss into my, to lock profits just above all these structures here. All right, I don't have the patience for markets to come back just to retest this supply before going down lower. What I will then do is, because I'm cutting my profits short, right? And the other option is, Leroy, why don't you just close tomorrow, Monday, 1:3, which is, honestly speaking, to me, a really great idea. Now that I'm on 1:3, to me, it seems like a really great idea just to take that instead of waiting. What I was, confronted with was the fact that we've got a bearish engulfing pattern here. And so it might be worth the patience, right? Because what happens is sometimes when you get something like that, then this may become a very good place for markets to turn back to, just so that they can go a little bit lower. So that's why my final decision is to kind of like lock my profits, my SL, just above here. And then I also am interested in opening a new sell order, right, with my stop loss just above there, so that just in case, markets do decide to, trigger me and then fall, that's what's going to happen, right? So EURCAD for Forum 60, you guys now know what the dealio is. I didn't close here. I should have, not really, I don't know. This is still very much my found target. And if we can get a second new sell triggered as we go down and hold the original sell as we go down, that's going to be some very good money in the making, right? So the next chart is pound Swiss franc. Right, and there we go, 16 to 17 May, like I said. Sorry, the reason why I know this stuff is I was telling you, when I go through my broker statement, so when I made when I do my 2-week review of myself and my traders and all that kind of stuff, I've got a pencil, I've got a red pen, and I've got a highlight. I like to print those particular documents and file them. But you can see your broker statement on your computer, and I actually go, well, wait a minute, why did this trigger off on this date and this on this date? And all of a sudden I start to see a pattern. And most of the time, all I do, because I love my notebooks and my Excel spreadsheet, I just make a note in my trading journal, right? I just made a note. I was like, okay, I've got some very good trades running, and they seem to have all been triggered between the 16th and the 17th of May, and they are wildly different. I've got the pound Swiss franc, I've got this and that, I've got this and that, I've got pound NZD, right? So could it be something about the pound that turned at the same time on that date? Or is it that these assets are correlated, which means in the future, if I want to trade pound Swiss franc, should I also quickly analyze pound NZD to see if there's a 90% correlation? One good trade idea here might mean another good trade idea there. When these things were falling at the same time, EURCAD was going up on the, you know what I mean? I write all this stuff down. Yes, it sounds like, mumbo jumbo garbage, and maybe it's because my background is in research, and so all data is precious to me. But it is fundamentally interesting, that we mapped this out, and we spoke about this crazy cowboy area for a very long time, and we said we were going to wait for that higher touch, and it happened on the 17th. If I was to do a survey of the number of people who watched War Room number 60 and the number of people who are still in this trade with me today, I would be surprised. Unless if you exited here, which is fine. If you're like, look, Leroy, we arrived at a weekly strong demand, I thought it was time to get out, then that's fine. I completely agree with you. Well done on that. And that's what I want to say. For pound Swiss franc, I am closing this trade as soon as markets open. I do not want to lose out on the gains that I've made, right? So we've already had a very incredible drop, and if I wait another 2 to 3 days to see if markets are going to break this demand with me in it, I am going to be very in trouble, right? Already markets fall 1:4, but right now markets are starting to work their way back. So already on a 1:3, I cannot afford to. I don't want to lose out on these beautiful profits. So I will be closing this trade, swing from about the 16th, 17th, all the way to about last week. So this is a 10 days trade. This does not take too long. You didn't have to wait forever like some of my swing trades. 10 days is reasonable. You have a salary, you wait 4 weeks for it, right? It's normal. It's normal. Let money cook and bake. This is a nice, clean, 1:3 clean trade that we spoke about in War Room 60. I keep emphasizing that because the videos are online. So you can go see if I'm full of nonsense, if I'm lying to you. Go check the analysis, check the before and after, learn from it. Right, pound NZD is the next War Room trade. So when I spot a new trade idea, I will tell you where I think we should trade. But some of these assets, we need to first manage these positions. Right, so we've got this interesting fixture here, and I don't think the overall plan has changed on pound NZD, right? It's very choppy. If you guys listen to how I described it a few weeks ago, I didn't like it. There was no direction. It was meaningless and all sorts of things. And so kind of like to be very lucky to get a clean touch on the daily time frame with not much confluence on the weekly, except for a fib confirmation is interesting. I don't trust it long term. Markets on Friday, need to try to fill this week to completion, but this week had already started to react to some very key turning points in price, which could have signified some buying, right? So this is a very key turning point to price here, there, right? And then that's where markets are kind of like are right now. Now, it would not be the greatest risk-reward ratio if I was to close this right now, all right? And I use the daily entry. I'm pretty sure if you use the H4, you'd have gotten so much more value, right? If this was where your stop loss was above, right? But I can only say that in hindsight, right? When I'm planning my trades ahead of time, like I do in the war rooms, I want to do it to the best of my ability, to the best of my knowledge and safety of my account. And in hindsight, I know for a fact that my stop loss is always better off outside a daily area of value than inside a daily active area of value, like an H4 stop loss. But you can see that it would have worked very well, right? But unfortunately, if you're like me and you just took the daily, we are not that far into profits, right? And by far, some traders do like a 1:2, and that's what we have. There's nothing wrong with that. If you like to risk $1 to make $2, that's fine. If it matches your statistics, it has to match your statistics. I've taught on this many times. Just want to re-emphasize this. Risk to reward ratio is not a random number. It is not a wish list. It's not, I want to risk $10 in the market, but I want to make 100. And therefore, my R&R is 1:10. It is not. If you do this based on a random number, you're screwed. Risk to reward ratio is for a trader who's been trading anywhere between 1 to 2 months and now has enough data to say, what kind of a trader am I? How many trades do I win or lose? Am I a 50% trader, 50% wins, 50% losses? Am I a 70% loser, right? I lose 70% of my trades and I win 30%. Let's talk about a scenario where you're a 70% losers. That would mean, statistically speaking, for every 10 trades you take, however you take them, whatever methodology, signals, Forex groups, Forex guru, prophetic guru, robots, whatever your strategy is, you lose 7 and you win 3 immediately. Before you go on a dangerous path of hopping from strategy to strategy, if you haven't found a home, right, and I would encourage you to learn and to use the link down below, 50% off. And oh my goodness, by the way, thank God I remembered. You've got 2 days left to get the 365 course at 50% off, and then we're done. Second half of the year, there will be no discounts. I think I've been announcing this very, very consecutive. No one says they didn't know. 48 hours left to get everything, all our rules at 50% off. So instead of paying $400 US, you're going to pay 200, right? This is a crazy bargain. A month ago, it was 75% off when we're celebrating a 365 anniversary. All right. But before you change your strategy, the first thing you need to address is your win to loss rate as a trader. Guess what? A lot of traders do not know this. So how do you address it if you don't know? If you don't have a trading journal, if you don't have a place where you're keeping track, if you're not trading in clusters, how do you know you generally lose 7 out of trades? Maybe you're doing a cluster of 20. How do you know you're most likely to lose 15 out of 20 trades? You don't know this stuff. You need to know this stuff. And if you haven't been using a trading journal, email your broker, ask them to give you your statement, and sit through the mess of your trading life so you can fix it. The quickest way to clean a room, ladies and gentlemen, is to clean the room. The quickest way to get your trading better is to find the clutter, find all the noise. So before you change your strategy, what is your win to loss rate? Your win to loss rate will dictate your risk to reward ratio. What does this mean? Well, it's going to say, look, Leroy, I am stubborn. I am a stubborn human being, Leroy, and I don't like things being easy for me. I know you're offering an incredible course at 50% discount, but I'm going to stick to my support and resistance trading plus indicators plus God knows what else, right? Indicators. I just feel like my spelling is just like slipping off these days, right? Indicators plus my 15 Forex signal groups that I'm in. All of this, Leroy, is going to make me a millionaire. You wait and see how this beautiful confusion in my life is going to make me rich versus just learning how markets work through your course. Fine. Let's say you're that type of a trader and you don't have anything. So you download your broker statement and you start to map out your wins over a monthly period. So you look at all the trades you took in April, you count how many trades you took, you look at how many you won, how many you lost, and all that stuff. Let's say you find out that you're a 70% loser, 30% winner. Therefore, this is kind of like the scenario that you're doing. Your risk to reward ratio must be dictated from there. That is to say, I'm not changing my trading strategy. That means, Leroy, I'm going to keep seeing the same dumb stuff I'm seeing on the charts that I've been seeing on the charts for months and months and years because I am stubborn to change and learn something new. Fine, keep saying the same dumb stuff. What we want to do, though, is to figure out how do we grow the win rate, not to be drowned out by the number of losses. That means with the exact same strategy, you're going to only now start taking support or resistance or whatever your indicators, trades that will offer you a specific risk to reward, which means you realize the first impact of this is from taking 50 trades a month, you're most likely going to drop to taking 20 or 15. So you're going to reduce the number of trades you're taking because now you're looking for prime targets. If there's a support, that's a resistance. If the next resistance is here, because that's your trading strategy, and the next support is there, you are not going to buy here to exit there because you're going to tell yourself this could happen, right? Where fine, you buy there and you try and sell there and markets screw you over and hit you there. Or you map out a support and resistance, and instead of markets supporting, they tag you out. You are not going to focus on these type of setups anymore. You're going to focus on setups that give you a better R&R. Would 1:2 work for you? Would risking $1 to make $2 work for you? Probably not, because for every 3 trades that you win, you seem to lose 7 trades. So 1:2 R&R would put you at about 6 versus 14. So you'd want a bigger R&R. You'd want to start using higher time frames where your R&R is 1:6, 1:7. And then you go, I have to become a swing trader. So if there's a support here, Leroy, and it holds, and markets hit a resistance, I'm going to hope and assume it's a retracement and hold this trade until it gets to a better destination, right? What this does is it reduces the number of trades you take, thereby reducing the number of losses you are making, thereby reducing the hit you're getting on capital. It maximizes the few times you are right in the market, increasing the dollar value of the few times you are right according to your strategy. Now imagine doing this with an actual strategy like supply and demand, smart money concepts that actually max out where the big boys are playing, right? Then your life completely changes, in my humble opinion. Now, given this in mind, on 1:2, I will be locking, breaking even here, getting out of risk, right? Freeing up some margin, like I said, that's what I want to do, and moving my stop loss to my entry, and then we shall see. We shall see what's going to happen here. In front of us is a bearish engulfing pattern. In front of us is a daily supply. And inside a very unclear, remember the governing time frame for me is a little bit more unclear than usual. It's too choppy, right? Markets should go down, but they could go up. It's too choppy for me. So because of that, I don't want to randomly wake up to a $200 loss on this trade, or 300 or whatever amount you are risking, or $10 or $5. It's not about the amounts. It's not about the lot size. It's about the trader. Does the trader have a systematic approach? You know, my mentor used to say, can you keep $1, Leroy? If I was to give you $100, could you come back a month from now with $101? $101. That was my goal for the first 6 months learning this thing. Can I keep $1? Not can I make 1,000? Not can I become a millionaire? Do I have a process, a trading system that will keep my capital? Because if you don't have a trading system that keeps your capital and you're focused on growing your capital, you are lying to yourself. So, I'm done. Keep emphasizing the same thing, man. And it's because I see the pain. I post as much as I can. People don't care about my post, and that's okay. Those who have ears are listening. Breaking even here. Then, for those of you who want to trade an opportunity, it's going to be very high risk, but we might get a situation where we can retest that bearish engulfing pattern, right? So I'm going to come into the H4 time frame, and I'm going to look to see what's going to happen here on H4. I don't know if, actually, let me just make up my mind right now so I can tell you if I'm going to do it. This is how I'd make up my mind. I would then start to look at what my fib levels are saying, number one. So I'm going to draw my fib levels from the swing high at the entry, how I entered, to the swing low that markets created by themselves. And I'm going to start to make some interesting judgment calls. I'm going to say there's a bearish engulfing pattern here, and then there's one here, and it's all by the golden ratio. And then markets fell. Markets tried to come back to meet the one here. You guys see that? Markets came back to meet the one here. And then this becomes an interesting level. So let's just then now delete all of that stuff and make it clean. Make it clean, make it clean, make it clean. So how do we make it clean? We're going to draw a supply order block, make that yellow, and it's going to look something like this. So now I know inside my H4 price, markets have, for some reason, can't stay away from this area. Markets dropped in, markets came in. Markets left, markets arrived, markets dropped again. Markets came, markets dropped again. That is the power of the golden ratio, 61.8. It's not magic, I understand it. Now, what I want to do is I don't want to get stuck in an area of value that is glass effect. I don't want to do that. Why? Because then I'll become liquidity. But I also know that when markets start to create lower areas, sometimes it's good, sometimes it's bad. The only place that requires, that can get the status of a fresh supply is the second sell area that I've drawn, okay? But the area looks big for a risky take. Let's go to the 2-hour time frame. Then you can tighten it again a little bit if you want, or you can just take it as it is, right? So there's an entry point there. And for H2, if I was to take this trade again, for as a daily trade, that would be my entry point, that would be my stop loss, just inside that zone. Bearing in mind though that we're now breaking that big cardinal rule, a stop loss inside a daily area. But for me, it's because I've already entered above. I've sold at premium, I've sold high, and by tomorrow I am breaking even. Right, then we can play around. If you tighten these areas on the 2-hour time frame, you will realize that a fresh supply was met with the need. Price then dropped, and then markets, right, and then markets continue to drop, and now we've got a similar situation here. And so this is what, you know, could potentially play out. And if it does, sure, I'll put a pin in order there, and we'll see if we get stung, we get stung, all right? This is not a good secondary place. The lower you go in the markets, you already know it's high risk. You're dealing with high risk, right? So we'll see how that works on the H2 time frame on pound NZD. The next chart we need to look at is pound USD, and what a beautiful nightmare this is. Right, so you guys know that I am genuinely bearish across the market right now. Risky equities bearish, stock markets bearish, crypto bearish, right? Buying a bit of bonds whenever I can, that's perfectly fine. That makes sense. I like that type of rotation. Gold bearish. I'm dollar long, right? So when I look at pound USD, and remember we drew these structures together. We drew some equal highs. We spoke about cowboy levels. We drew a lot of things here. It is safe to say. It is safe to say, let's go back. Remember, everything that we're doing is not random. So we looked at the pound index. You guys remember that at the beginning of this video? And then we said, well, given where the pound is right now, you know, it is safe to say that it's going to come somewhere up here to this yellow area, right? So we are anticipating some strength in the pound currency index. So it would make sense to mirror that exact same strength to an asset like pound USD. Okay, and really, like, see, pound USD looks exactly the same as BXY. Now, I don't like counter trending. So when I am bearish and markets are not yet at the places where I like to sell, I don't like buying up to the sell point. To some traders, this means if you're buying up to the sell point, euro, you're buying because you believe markets are going to go there. So why not make money going up and then make money going down? It's because the money that you make going up is going to be based on choppy, highly manipulated levels. So yes, of course, for me to sell up here, pound has to get there. But the journey to get there can be very interesting and choppy, right? So markets could, in many times, keep deploying, you know, some fake outs, some all sorts of, you know, crazy things. I've lost control of my screen. Oh, there we go. Right. So because of that, I don't like it. I don't like it. Number one. Number two, I could not earlier on when I was preparing my mind for this yesterday, I really couldn't find a good enough place to buy. Like I'm looking at this upward ladder on pound USD, right? So markets finally leave. And maybe let's start from the beginning, right? So we saw on the pound index earlier on, it's arrived at a governing demand, and that's the governing demand right there, right? We saw that. Okay, then we come to the weekly time frame. We see that markets did create a strong creation gap, which is technically speaking another demand on top of a demand, right? And markets are rallying all the way up. Don't forget, pound USD, although slower, will do whatever Euro USD does, right? And on the daily time frame, we are now here. So I'm thinking, well, I want to sell there, but what about the people who come to forums, forget to look at forums on a weekly basis and want to trade this week? Well, the trade this week is probably going to have to buy. You're going to have to buy this week if you want money this week. And my point is, I found it a little bit more trickier to navigate that, where to buy. Now, if I look very carefully at, the structure that price has been building since, May, half of May this month, to where we are today. So for about 2 weeks, leading to this upward structure, right? You can see you've got a loop there, you've got a base, markets use it. They didn't use this one, but they use this one. And then the price goes up. And then as the price goes up, there are these micro, very miniature demands that are being built along the way, right? And then these micro demands are doing what they're supposed to do, right? What's a demand meant to do? A demand is meant to break structure to the upside, right? When you get price doing just that, breaking structure like this to the upside, you want to pull back, man. You want to pull back to that area to kind of like validate what it is. And what did markets do? They did give you the pullback. It's not the one I'm looking for, but they definitely came to meet me here at my area of competition. Obviously, I would not take such a trade because I don't want to be part of the fall. Where would be my stop loss? Here? Of course not. My stop loss is always going to be under a true order block, right? So because of that, I can't take such a trade, right? So this has been part of the problem. And then what happens when markets then all of a sudden chill for a little bit, and then all of a sudden base out again here, and then move up to the upside? All right, so is this now the new one? Because again, for me, my rules tell me that the first obvious demand is not the best, right? Markets will push lower, right? So do I not wait somewhere there? I don't know, right? So the answer to that, when I was thinking about my own trading account, since I'm finally back to trading this week, was really looking forward to, I wish markets would first get to this point, react to a supply, and then have a nice pullback to somewhere down there. Maybe I'll take a chance to buy, but I'm under no pressure to buy. I don't care to buy this asset. Really, I just want to sell it and be part of the mainstream money. So what I then did was I went to pound USD on a wonder. Those of you who used to follow the channel, all those things are coming back, guys. Remember, I did take time off to build the course to really make sure that my module 3 is in line with my module 1 and 2. And so I don't want any contradiction with rules number 1. There were a couple of those when I was testing this out. I had to do 1,000 live trades to develop module 3. Okay, so it's actually a big deal. Then I had to prune myself and really understand everything I've learned about trading psychology, not what I've just read, but what I've actually applied in my life. Because I can only teach you what works, and what works is what I have experienced. I don't know about other people's theories, right? So that's why I took the time off. But all these things that we're doing, mapping out London session, blah, 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 they'll come back. From June. The channel is going to be very busy again. So I went to the 1 hour time frame to map out our 9 a.m. London opening session, because that's really my market. I like trading the London opening, and it's still pound USD. So I mapped out all the opening times, and I started to see, the same areas that were seen and the chart I just showed you, which was on the daily H4, that on the opening time, markets have been very consistent. Remember, we're looking at the 2 week period, right? So let me just do this quickly for you. Those of you want to get a quick recessor, there's nothing wrong. You just draw what you see. You draw what you see, and we'll come back and make sense of it on the 1 hour time frame, right? And you want areas of value that are created, right? When order flows are most congested, right? And that is always at the close and at the opening of a session, right? So now I've taught this, all the videos are there on the channel, tons of the stuff there, right? So if you look at this one, right? If I do something like that, you can see at 9 a.m., markets kind of do, then at 10 a.m., markets give us a bullish engulfing candle. Then at 11 a.m., it's retested immediately. A day trader who is taught by me would be particularly paying attention to that, because that would be their first entry. Simple. This is module 2 stuff on a smaller time frame. Markets would explode to the upside in touch of the supply. A day trader who's literally there, living for the now, right? Day traders are in and out, right? An intraday trader would have had 1:3, I would like to believe, from this level here. Oh, man, I'm teaching today, and for some reason, I don't mind. I don't mind teaching today, right? So there it is there. So that's your first target. That is literally your first target, right? On a long. Risk reward ratio, 1:5, right? We buy here on the 16th of May, and by 12 p.m., 3 hours holding, you have got 1:5. I would hold because I'm a swing trader, but a day trader would close and take profits. What do you do? Because this is all you have. You look again and you apply module 1, module 2, module 1, module 2. That's all you have. You want module 3. Have you mastered module 1, module 2, module 1, module 2? What do bullish and bearish engulfments do? Well, Leroy, they create specific explosive areas of value. Fantastic. 1:5 means all the risk capital that you put in there, you've made profits on it, and the risk capital you're going to put in trade number 2, you've made money off it. But you know for a fact that this supply here was already weakened, if not destroyed. So of course, when markets came down, it's a retracement, not a reversal, because there's no supply to the left, because you see it in your chart. This is all happening on one beautiful trading day. Markets come back in, trade number 2 gone. As soon as this bearish engulfing happens, all you do is set and forget. You don't have to be there when it happens. Set and forget. Put the trading plan, put the plan in place, only trade the plan. How do you only trade the plan? If you let your pending orders explode. If you find yourself putting more impulsive market execution orders, you are now trading in emotions. Look at this beautiful second trade. Gone with the wind. It literally ran the whole day, gave you more than 1:5, which you've already banked, by the way, and kept going all the way up. This is on the 1 hour time frame. Then eventually, as markets were exploding up, let's say you were in that trade, you're not, you are taking careful note of your areas of value. You're taking I'm literally like I'm on chart number 4, and for some reason I'm teaching this stuff. It's not good for our timeline, but it might help someone. Look at this stuff. Clean. Markets come back at the opening 3 days later at 9 a.m. on the 19th of May. It's on the channel. I've got many videos of London market session opens. And that's all you would have to do. Take the buy, right? Clean imbalance, assess the risk, manage the engulfing pattern, another one, take the trade or not, it's up to you, but market definitely took the trade, markets exploded up. What do you do next? You look for the same thing. Every time markets give me a clean imbalance, give me a couple of order blocks, make very it's a bullish sign, order blocks, break of market structure up here. You can see that supply is taken out. Markets potentially trying to come back. Would you have made this one? I probably would have missed out on it. I do have a lot of senior traders who consider these wicks behind my order blocks, so maybe they would have been able to maximize on this trade. Personally, for me, I don't know how far. Maybe it's not like it's a big area of value. Maybe I would have caught it. Most likely not. Maybe price would have left me behind. I don't know. But this is all happening right there. All right. There's another area of value. Then markets rally. Markets create the exact same identical structure. Look at these hammer candles. Maybe that's what you want me to talk about. Candle patterns. Right. Look at these inversions. Every time there's a market pause to add more buy orders. That's what it is, guys. Institutional buy orders. Traders buying at those levels, looking at the same patterns. So what does it create? It creates a demand. Look at the imbalance. Is strong enough to hold? Would you take this one? If you did, you got burnt. Were there any lower demands along the way? If the answer is there's a cluster of lower demands close by, especially on small time frames, what is the rule? Well, the rule is you choose the lowest one. Absolutely. You absolutely do. Markets go up, markets come down, come back down here now. Markets go up again. And so that's what you do. Like if you really want to trade this thing up, right? You're going to have to come to the 1 hour time frame and apply this mad methodology, which requires you to study the charts historically, find out where everything is. Where are the small 1 hour suppliers that could potentially turn price away, right? So that's where we are. I promise you I will not be doing that for any other chart because geez, that took a lot of time. That took a lot of time. But for a day trader, then that's what you're looking for, right? You're looking for even as a swing trader, you're looking to find a clean day trading entry, then hold and turn into a swing, which is kind of like what I do. I don't like to day trade as in to close on the same day, but I love using their entries to hold for a good swing, right? So I suspect something like that is going to happen along this week into next week. I do suspect that it will be very interesting come Thursday, Friday because of NFP and ADP. So just be mindful of that. Right. So pound USD in the short to medium term still going up. I am more interested in a cleaner sale, but don't mind finding a slightly risky a buy. Right now, this one I remember marking this out. This is on the daily time frame, but let's just kind of like look at the full analysis. AUDCAD on the governing time frame, AUDCAD on the governing time frame, right? And I apologize for all these lines, right? So we've got a bearish engulfing pattern here, right? That's why we've got all these white lines. Let's remove them for a second, then we'll redraw them. Guys, when you have this, you have a supply. I mean, I know 365 students who've done the course are probably so over me saying this because you hear me say it all the time. But what am I supposed to do with some people who are literally losing money consistently because they just stubborn? Lose money because you have bad psychology. Lose money because you're working on your discipline. Don't lose money because you're using a silly trading strategy when there is something better. That's silly, that, in my humble opinion. Anyways, area of competition is right there. Markets are supposed to come up and retest that order block. That is just the way of life. And so we are expecting that to slowly start to slow down any type of buying, number one. Number two, and start to help us start to navigate the downside, right? So I'm just going to remove all of this that I've just drawn right now to make my point and bring back all my white lines so that we can then see the analysis at play. Right, so there was a bottoming out here in equalizing zone, really, but the demand can be slightly lower or is slightly lower, right? There's a lower demand here. One could even argue as low as this. So the green area should be this low. And some people would argue for something, this high, right? That this is the demand zone, right? I think it's lower personally. All right, on the weekly time frame, on AUDCAD with a similar thing, bearish engulfing pattern, very high wicks, markets almost closing above the open of this big red candle. Remember, red candlesticks open at the top, close at the bottom. I've explained the significance to that when it comes to supply and demand trading, when we're looking for sell high, buy low opportunities, and why that logic must stands. But you can see that if we're to draw this order block as a supply, the weekly time frame, it would really look more like this, right? We're in very much bearish territory if we're looking for something along those lines, right? But we do acknowledge that there's a strong imbalance here to the upside, so there should be some type of buying, and that's what we've had. We had some type of buying for the last 2 weeks. 1, 2. All right. Now on the daily time frame, and we spoke about the buying, of course, so that's why we're talking about this today. And there it is, that rotation, 16 to 17 May, 16 to 17 May, 16 to 17 May. Let's say you missed it, it's fine. Come to war rooms, watch the videos, write stuff down. There's a bullish engulfing pattern. On the 20th of May was your last chance. Price came in there for you. Yes, it's there. It's there. Come to war rooms, take the course, learn the course, learn the rules. Come to war rooms, take the course, study your charts, make your money, rinse and repeat. It's the job. That's the job. The job of a soldier is to load a gun and shoot. You should keep shooting until the enemy is dead. The job of an accountant is to do accounts. The job of a painter is to put a paintbrush in a bucket and paint a wall. The job of a trader is to come with the right tools to the markets, analyze, make the best risk-based trade idea for the account, and rinse and repeat. It's simple, very much simple. Anyways, the buy that we are in, those of you who are in it with me, right, has reached this interesting crossroad. And I started to wonder, like when I felt away on Wednesday, but I didn't feel like making decisions because I was still like, euphoric. And I was like, okay, fine, I'll wait for next week, Monday. But when markets made contact here, the temptation was in me to just close. because generally speaking, it makes sense for markets to start to drop, right? And then I was pleasantly surprised on Friday when I saw a big green candle, right? Really was very ecstatic because it just means I haven't lost too much, right, in terms of profits. And now markets are pretty much where they were, you know, probably 4 days ago on the Monday, right? So we've done a 1:3, guys, 1:3 comma something. So it's really, for me, 1:3 is always my target. Why did we draw these zones like this in war room number 60? You can go back in time and you'll see it's because I was looking at H4 areas within the daily areas, and those are going to be our target zones. So this is where we are right now, but this area has been visited a couple of times, and it's reasonable to assume we're going to go a little bit higher, and this is a little bit higher. This H4 supply is inside the daily supply, all right? But now when I look at the daily supply, which is really a good indicator of what I'm looking for, markets have just created right now a PCP on Friday. This PCP is very close to this daily supply. So for me, folks, generally speaking, 9 out of 10 times, I want to be clear of such things. You know, there's a difference when I've got 2 kids. One is 2 years old and one is 7, turning 8 this year. The 2-year-old just turned 2 a few days ago. When the 2-year-old is on a bike and she's losing control, she's learning how to ride, do those push tricycles, and she's losing control and she's coming to me at full speed. I'm never scared. I'm never scared to stand in the way of her bike and just stop the bike. It's been pushed by a 2-year-old. She's just trying to learn her body. But when my 7-year-old gets into his gas motorbike, all right, and all of a sudden he's put too much, you know, accelerate on his little motorbike, and he needs dad to save him because he feels like he's going to crash into a tree. The difference is now this is a very bigger bike being driven by a bigger human being, and it's actually being propelled by gas. So the impact to me is a very real possibility that I'm going to get hurt. And so because of that, I have to structure my stance in a very specific, strong way, plant my feet to the ground to catch him, because it's come in a bit very, very, very strong compared to a little 2-year-old pushing a small tricycle. This is important because when you watch price approach your supply and demand levels, many times I've brought this up on the channel. I even called it an arrow effect. Sometimes when you're seeing green, 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 and it's straight, right? It's a very straight, lot of buying pressure. It's parabolic. There is no distribution. This is what distribution looks like. Markets are just coming in hot and straight. Be careful. The supply that's meant to catch those buyers won't hold. It won't hold because of the strength. Or when you see buyers pause, complicated 365 candles. If you've done the course, you would know what that is. You don't want to take the course because all Forex mentors are fake and blah, 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 and leave off courses. Ask my students in the private Telegram group. About 1 to 2 students join our private Telegram group. 1 to 2 or even 3. If I was living off that, I would probably be very skinny and very depressed by now, all right? This is literally your choice, my people. But complicated 365 candles have happened here for 2 days. And so that tells us something. It tells us that, geez, Louise, maybe money is being pegged onto a very specific side. And maybe, just maybe, be very careful right now that trying to sell here might not yield much results. So when they create a PCP, potential continuation pattern, the question is, where is price going to continue to? And this PCP here to me tells me up. I don't think this is strong enough to hold. It might be that H4, right? So markets will start to distribute inside it all the way to the H4. If that's the case, then sure, I'll sell. I could consider selling there. But the reason I won't is, why bother when there's a perfectly higher supply right above? So because of that, that's why I'm removing all those 2 lines. I said this in the chat before. I really want to emphasize it right now. If I keep teaching on every single chart, we'll never finish on time, right? So that's AUDCAD, my people. The things that I'm doing tomorrow, Monday, is number 1, right? I am definitely getting out of risk right now in the markets as a swing trader. I'm very happy. I will be doing more than just breaking even. I will be locating a place to lock some profits now, all right? And what was a little bit disencouraging about this particular chart was the next strong order block is really far, all right? It's been used here for sure. But if you come to H4 time frame, the next very, very strong value-based case demand order block, right? So there's nothing here, is somewhere down there, and even that the imbalance is not clean, right? So for me personally, I am of two minds. But if I write it down right now, this is what I'm going to do. AUDCAD, I'm telling you now, when markets open tomorrow, Monday, I'm going to close. I'm going to close this. I'm going to take my win at 1:3, which is beautiful. That's literally the goal. I've already left a daily demand to a daily supply. Whether I think this daily supply is going to hold or not is an analysis perspective. But when it comes to my money, I'm not taking the risk. Once I close this particular trade, at 1:3, I am then going to look to put a low risk entry here. Why not? I've just made 1:3. I can risk another $1 or another $1 to make $3, another 5% of the account, whatever, or however your math works. And I'm going to see if I can get quickly triggered here this week. And then we'll see how far this horsey rides, right? As soon as I break some structure, I'll then move my stop loss to entry point and then hopefully target there. That's what I'm going to do tomorrow. So I'm closing this trade and I'm opening a new buy pin in order for some type of continuation pattern. When I see this particular situation, I would like to see a retest, stop loss just outside, and we'll see how far that goes. So as I speak to you, I'm writing this down, right? So close trade, open new one, right? Not open new one, set a pending order there. That's AUDCAD. Guys, I have to, otherwise I'm just going to do 5 charts and I'm going to call it a war room, right? I have to start to move now. I apologize. I don't, but I really hope the teaching, the first, hour of this war room has been good to you. Make money. Mommy, make me money. This is from War Room 61. War Room 61, guys, happened at such a beautiful time before the dollar even started to fall. Remember, the dollar was strong. The trade idea was clear as day. Go to the channel. Go rewatch War Room 61. It's all there. I tell you this. Look, guys, upward trend line. Then markets arrive at a governing demand. Let's see what happens. We see what happens. Markets made contact. We missed it at the time. We spoke about it. And so what we started to do when we're doing this War Room 61, I know it because I rewatched the tape. I literally go back and watch some of my videos. Because sometimes, like, am I crazy? Am I the only one making money? It's just me and my senior traders? Do we just have magic? What's going on? Did I not say it? I have to do that. I have to hold myself accountable. Right. And we mapped out, this potential, and it's literally the exact same thing we just did right now in AUDCAD, where all of a sudden markets are now giving us our very first bull connection, which is normally speaking a bullish engulfing pattern. And then I'll come talk to you. I spoke to you guys on War Room. I was like, okay, guys, this is what's going on. Here's the area of competition, right? Here's the thing. Let's see, there's a lower demand there, but on the daily time frame, this is the whole thing. Yada yada yada. Explain it. Explain everything. All right. If I ask you right now, can you all share on the public or even in the private Telegram group, how many people are in this trade with me right now? How many people are still holding? Because this is a lot of money. We are up 1:28 risk reward. This is good money. Markets came in a long time ago. First people got in lucky and then just kept going. Right, now I'm bringing this chart back up because I need to make some decisions. Remember, I want to build some margin because on my other trade account, I'm going to be shifting focus, beefing up some FTX crypto trading platforms, and I'm retaining a lot of stocks. So I need a little bit more margin. I need to start transacting this equity into capital. So I'm closing things and opening things and all that kind of stuff. But this is a fascinatingly beautiful trade right now. I'm looking for future buys. Number one, why? Because there's still a lot of room to go to the upside. All right, we marked this out in War Room 61. We explained where price is going. Markets are not random. We understand that stuff. Markets can retrace, dance, do a river dance, right? We've got the whole structure break here, blah, blah, blah. But really, this is the final place. However markets want to get there, they will eventually get there. All right, but I don't want to lose any more than I've lost, right? So somewhere up here, all right, so I've already lost this little bit, and then markets went there and closed there, right? So I don't want to lose any more than this little chunk there, all right, in principle, right? Now, I wish I looked at this chart during the week last week, because what I would have done is I would have maybe told you guys that I'm going to quickly buy here as markets were coming here on the 20th, right? If I'd seen this on time, that's what I've told you, that I'm going to buy again there, but I did not see it on time, so we've missed that out already. That's gone. At least for me, it's gone. So the first thing I'm doing with USD China Yuan, and I really want everyone to be clear on this, so that 10 weeks from now when we talk about it, or when I'm doing another profit video, etc., no one say they were not being told, right? So I'm closing USD CNH, and I'm considering a very big win because that's exactly what it is. And then I'm looking for more buy entries, right? And that's the next step, right? More safer. And remember, the later you start to buy, the difficult it becomes, because remember, you want to have a situation where you continuously are buying low. The first thing I want to do is just to pull a friendly bullish Fibonacci. Right, I'm going to use these lows down here and the market highs all the way up there. And that's what I can see, and I'm very happy with that. And remember, this is, for me, is dead and gone because we missed it, number one. And if you were to wait for it to come back to this first level here, you run the risk of markets choosing a lower demand. 50%, very good retail area. You know, maybe we get lucky, maybe we don't. You know, only time will tell. Right, so then there's that, and then there's the obvious one, right, which is the most immediate area of value, which is right over there. And you know, I'm two minds about this, but for me, this feels like a cowboy area. So I don't want to be too desperate to get in because I already know how much upside there is on the chart. So the next question I have to ask myself is, where is the dollar going? Because remember, guys, if you start with your currency indexes, you get to understand stuff. So this is where the dollar is right now, and that's where USD China Yuan is. To me, it looks like the dollar, to me, right now, needs to fall a little bit more. So if the dollar is going to fall a little bit more, well, let's check this out. Let's see. Dollar starts to peak on the 13th of May. So we can say between the 13th to the 17th of May, the 1, 2, 3 big red candlesticks. I don't want to make this up. I want this scenario analysis now, parts of it anyways. 13, 16, 17. So 30 is probably a Friday, then the Monday, Tuesday. So these 3 trading days, 13th to the 17th of May. Let's go see what those look like in US dollar China Yuan. CNH, China Yuan. 13th to the 17th, right? Is already said. I think that's what we said. Sorry, excuse me. So I'm on the daily time frame, and all I'm doing is I'm looking to see, is this thing really mirroring the dollar? Because if it is, buying here is silly. Look at this. This is the 13th of May. This is the 16th of May. This is the 17th of May. The pattern is the same. Dollar DXY coming from a very strong up movement starting to turn. It's literally the same. And we are saying on the DXY chart that right now, wherever the DXY is, it still needs to go a bit down. And I'm saying to you, this is why I would not buy down here. I would choose not to. I'd rather wait to buy there. All right. But before any of that happens, please remember, I'm telling you now, I am getting out of my previously long positions so that I can take this money to the bank with me. I actually did quite a a sizable withdrawal anyway, so I need to rebuild the account, right? So that's where markets are right now, right? Somewhere there. And I'm saying this is, I'm closing this, I'm not trading. My first buy is here, and if I lose, and then it's better than losing all the way up here, which was a bit dumb, right? If I'm going to lose money in the markets, let me be present enough to have done my best in the markets, right? And then if this stop loss hits, then we need to really assess how low the dollar can go, all right? Because we can see here we've got a couple of levels. I'm going to go to H4 out of interest, and H4 is interesting because we've mapped out this area on the daily time frame of 50, and on the H4 it comes through the golden ratio. Guys, I promise you this is better. This is better. Yeah, we don't have a correlating order block. I get that on the daily time frame. Let's go to the daily time frame and see what's happening. Right, so we don't have a correlating order block on the daily. We've got this area here. Now let's go Akinihashi to find it. Right, so that's where markets are right now. All right, and then let's go Akinihashi on H4. This is at 50%, and then there's nothing on the golden ratio. Man, this is messed up because I'm not going to wait to buy all the way down there again. I'm not going to hold such a beautiful swing all the way down there. That's crazy. I'm of two minds, and a man who's of two minds is unstable, according to the book of James. So I don't want to be of two minds. Right. So I'm gonna go back to normal candlesticks. Yeah, I'm gonna stick to my guns, man. I'm gonna stick to my guns. I'm gonna do an imbalance test. It's not. Yeah, that's good enough. All right, it's cool. I'll split the risk. So I'm gonna split the risk. I'm gonna have two pending orders on USD China yuan. I'm gonna have this one here, which Fibonacci wants so bad at the 50% mark. Right, and so instead of having say, let's say I was going to have a 0.10 lot size or 0.20 or a standard lot size, I'm just going to split the risk and have both pending orders. So if I get stopped out here, then I'm definitely going to have to refine my area there, but I'm going to have a red boundary here because once again, I like what I saw in H4, even though it does not have the type of confluence I'm looking for, and I'm definitely not buying anything here. All right, right, so moving on. Euro NZ, no, I'm lying. S&P 500. Sorry, I already have this on my watch list, and it's the chart that's already perfectly marked up, so to save us time. Right, S&P 500 already talked to a lot of the stuff in the risky equities introduction about this bull run based on the fact that there seems to be some data that suggests that inflation has peaked, and what happens is then markets then believe that the Fed does not have to be rough with the markets, doesn't have to be excessive with the interest rate, and if the exchange rate can be reduced, Mr. Powell, and we can start to factor that in, then equities can start to come up. And the question is, why are equities moving without crypto, right? The leaving crypto behind. The decoupling has begun. Why is the decoupling begun? Very interesting times indeed. Now with S&P 500, and NASDAQ and all these equity markets, I have one question only. What if it's this? Last time markets were falling because of a war and inflation fears, and then we had a 2-week bull run. I don't know if you guys remember this in March. 2-week crazy bull run, which meant nothing. It meant padalala. It just brought markets to the best premium sell points on the charts. That's all it meant. And some people know how to buy these things, and maybe you're in the buy and you're making money. I'm not in the buy, as you guys know. If I'm in a trade, I'll tell you. If I'm not in a trade, I won't trade. I'm not in any of these buys, right? So I got thinking, well, what if it's this, the short-term bull run? Where would it go? How far would it go? Let's say we had another 2-week risk on run based on this. Wait a minute, 2-week risk on run. Did this run for 2 weeks? It ran for 2 weeks, right? It ran for 2 weeks. Yes, it did. Did I not start off with this in earlier on today? Fed rate 132. I did start off with this in the video earlier on. I'm sure those people find their academy. Someone wrote a comment, by the way, ladies and gentlemen. I need to vent about this. Someone wrote on one of my Facebook posts, "The boring academy." The boring academy. Literally wrote that. And it's a fake account. So it's probably someone in our Telegram group who we've told to stop doing ABC, wherever that person is. I don't know. I'm speculating here. It doesn't like what we do, finds what I do boring because I talk for hours about markets and I'm freaking mad accurate. The Boring Academy. Anyways, during an episode in the Boring Academy earlier on today, I told you guys that in 2 weeks' time, we're going to have another interest rate meeting, and the markets are starting to price in a 0.5 base rate hike, right? I said this 2 weeks ago, and I find this interesting that there was a time when the markets, just before Powell came to speak at the very first interest rate hike in March, I think it was on the 16th, where markets rallied for 2 weeks. And now I'm seeing that we are 2 weeks away from another Fed interest rate decision, and markets could rise. You guys get what I'm saying? Do you guys get what I'm saying? So then I'm looking at this thing and I'm thinking, man, earlier on I spoke about the arrow, I spoke about my kid, I spoke about how when markets come with zero distribution, that these areas sometimes can hold. Sometimes you're strong enough to catch the bullet, to catch the arrow, but most of the times it's dangerous. Then I thought, well, let me see how the power of the 2-week bull run in the market. So I use my ghost feed, clicked on my ghost feed, and I just start to map out here 14th of March all the way to the last time markets rallied there. All right, and then I simply move this. Oh, man, sorry. There we go. And then I simply take the ghost feed and I just project, right? So from this little all-time high situation, right? The candles, I want this candlestick. I clearly messed it up. Let me just quickly do this with you. I want to see red, and then I want you to be green. And then I definitely want to see the wicks clearly so that I definitely know what I'm doing, right? So I apologize. Right, now let's see if we can redraw that, right? So I'm just simply keeping track of this moment in the charts, and then markets started to fall, right? That's all I'm doing. And I'm just going to drag this, make sure the wick is sitting on top of my expected line, right? My proximal line, the market crash 20% line at the bottom here. And you can see, I know it's not the best depiction, but it kind of like maps out that there is enough room. All I'm trying to say is there enough room for the markets to do what they did the last time. Leaving here, which they already have, right? Like they did down here when we first called this the very first market bottom. We called this market bottom 30 days in February, Valentine's Day. It happened on 14th of March, and now there's a new market bottom here, the proximal line that we spoke about on NASDAQ, right? It's the S&P 500, of course, right? And I'm saying that they still, the 2 weeks run to drop seems to match space to suggest that, look, man, you're not going to survive this supply, but for some reason, markets are not going to get through this one, right? And that's where I have my big old sell sign here. Right, so I'm bringing this to your attention because I do suspect that we might be, maybe, I mean, I'm still very bearish, so I don't care about 1 or 2 week bull runs. Show me reversal, then I'm happy. Don't show me retracement. Any rally right now can be a potential retracement rally, all right? It's a bear rally. A bear rally is a rally where markets go up just to be sold disastrously even lower. And you know I'm still team bears right now. So I'm simply saying it's interesting that the same movement, which is roughly about 11% improvement in price, is literally the same movement, right? Waiting for markets somewhere in the near future. If markets follow the same pattern as the last market bottom on the 14th of March, right? So there's enough room to hit the supply and then start to fall again. So just be very mindful of that, right? So if you get caught out in buying and you get too excited, number one, for example, buying just before a supply, you're going to get chowed. Buying inside a supply, you might even get chowed, right? And then by the time you start to want to really buy, it might be too late and markets are now falling. I'm going to be waiting for the sell. Now, I know for some of you, be like, yeah, that's going to take too long. What can I do right now? Well, I looked for you. I looked for you. So what I do is then I look clearly, carefully now. What's going on here? Markets are about to approach this cluster of supply. I'm not sure if it's going to hold, but why did markets not hold here? That's the question. Yes, proximal line. Yes, the 20% bear market line. Yes, Fed is trying to, not Fed, sorry, institutions don't want the market to crash. Yes, people are losing money. Yes, a lot of people pump this area. I get that, but why did the supply fall outside of that? What's the supply and demand reason for that, right? I went to the H4 time frame and I had a look carefully, clearly, right? And that's what I want you to do, right? When a supply fails, you must find the opposing area of value that took it out. Teaching again. Sorry, it's annoying. Today I'm annoying myself by teaching. I'm supposed to be just giving signals and moving on with my life. This was the highest point of the daily supply that should have held price, to account to some sell pressure. We can see for an absolute fact, it did not. Whoever tried to sell there was, number one, silly, because you're selling too low. It's supposed to sell a long time ago. Now, this is literally where I started to take profits, actually, and close my trades, right? So it's quite silly. But number two, you had seemingly a demand very close to this supply that was strong enough to break market structure. So those of you who want to buy, this is your experimental zone. Those of you who want to buy the S&P 500, that is your experimental zone. Once in a while, in my live classes, I always have great students who tell me if I'm sharing screens. I once did a video. I did a video for you guys this week, by the way. I didn't even upload it because for 1 hour, I was sharing the wrong screen, and I just didn't have the time to redo the video. You know, such is life. And now that data is now useless to you anyways, right? But that was painful to edit and realize, you know, there's nothing I could have done a B-roll, but that was going to just take more time. But it's fine. It's fine. I'm giving you all the information you need right now in the war rooms, right? So those of you want to buy, maybe, that's your saving grace. And then maybe, get out here. Get out there, because, you know, this is a significant part of the daily cluster sell zone, right? And then, of course, there are fresher supplies up there. Those of you open 1 or 2 positions because your account can afford it. Take position number 1, take profit, grow your capital. Position number 2, lock profits, and then see if you can hold it into this area, right? And just keep building like that. No, build, right? And then I will join you guys on the other side when I slice this cake. If markets come down here and I'm paying attention, I'll try and buy as well. But I'm definitely not trying to set an alert or opinion order here right now. It's not really my thing when it comes to indices. I don't trade against the trend, and there's no data right now telling me that, you know, the market crash is over, except for, you know, everyone's speculation. So US 30, you're going to get the same analysis that I just did on S&P 500. So I'm not going to waste time. Look at the US 30. Look at how sharp. Look at how sharp this arrow is. No distribution. Take out a supply. Why are you taking out a supply? No distribution. What does this mean? There is more demand than supply. So markets are going to go up. More demand takes out supplies. When an area takes out an opposing area, the demand that caused that area is strong. On the daily down there, that's a strong demand. That's the crisis demand. Markets don't want to close below this level for whatever reason for the Dow. So when markets approach this cluster, be very careful because they're in it now. Price could fall, absolutely. But we do seem to feel a little bit more. You know, a lot of money is flowing back in. A lot of people are very risk ready, right? So on the H4 time frame, I did the same thing for you. Look at where the breakup structure was, where the broken supply is, where the demand that actually did the most, right? If that fails, you come try again here, right? One of these will work for you, right? But, you know, good luck. I would get out just before that. I would not hold through that. Unless if I have 3 or 4 positions, then sure, take profit 1, take profit 2, somewhere there, then take profit 3. Is when Leroy will be trying to sell against everyone again. All right, that's kind of like the trade play. So we're covering both the buys and sells today, guys. The next chart, as quickly as possible. I would like to talk for just another 10 minutes, then we call it a day. XAUUSD gold. We spoke about selling gold. We spoke about no matter what happens, you know, gold fell, and then gold finally found a sitting here. I think in the previous war rooms, gold was already there. There was another buy area that we marked out here, but I told you that, you know, I put a big cross on it in the previous. I know this because I saw my tapes yesterday. I literally saw myself tell you guys that no, and you can see markets sold through that area and bounced in the last demand, and now markets are moving up. Why are markets moving up? Well, there's a demand, number one, sure, but dollar is falling, inverse relationship, right? So now your question is, if you want to sell like Leroy, because I do want to sell gold, I really do. You have to kind of like look at this thing realistically and say, well, how much room is there? How much room is there for sell? You've got a couple of unfresh zones. This is definitely no longer fresh. You've got this zone, but it's right here. Sorry, wrong tool, right? This zone, right, is right here. Literally, markets have already started reacting to it. Okay, and I'm not in that sell right now, so I can't sell here because I'm not in the sell. It's too late. Number two, this could be a complicated 365, you know, pattern, right? We don't know because of how the Friday candlestick closed, which is not, you know, really endearing. But number three, dollar is still falling. So if dollar is still falling, right, and it is, because we looked at the DXY many times now, then gold has an inverse relationship. Right, so if you look at those dates, 13 May, blah, 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 17 May, the ones I keep telling you about, right, you can see there was a rotation to the upside for gold, right? I told you 16, 17 May, very, very important across a lot of assets. If you're paying attention, right? So if I was to sell gold, I would wait up here, personally. And I'm not even looking to buy, so I'm not going to do buy setups because of time, all right? But yeah, good luck to all traders buying gold. I'm not saying you can't make money. I'm just saying I, Leroy, will not be in it with you. There's a difference. I am not a guru. I'm not a prophet. I am not a Forex god or Forex king. Just a normal human being doing the stuff with you, right? So same situation here with the Nasdaq and the S&P 500, a very strong, seemingly supply, somewhat distribution here. But we do know that, this is likely right now leaning to the downside long term, but this might not be the right place to sell, given that the dollar USD is falling, right? So this might be a good time, like pound USD, euro USD, to keep leveraging up to the higher side and then sell. So the first time I want to sell AUD USD is here. See how I'm going now? A little bit quicker, right? Why? Because I've taught for free for like an hour now. Right, so USDCAD is going. Remember, beautiful buy that we had a while back. We closed that buy. I told you to close that buy. We announced this buy, close the trade, the managing of the trade over a series of orders, and we closed. I told you I got out, and I told you why. Then I made a video of how much I made. Right, this was one of the testimonial videos I've done on the channel that I keep meaning to do every Saturday. Right, so I'll do one this week of how much I've made from all these trades I'm closing, how much was lost. I mean, I'm aware that there were a couple of stop loss hits, so I'll discuss those too in tomorrow's video. But I've written here on this chart, Leroy, where is DX now? Right, because look at this. This thing starts to fall on the 13th of May, right? What else starts to fall on the 13th of May? What else starts to fall on the 13th of May? You can type it on the chat there. 13th of May, the dollar, 13 May falls, right? So 12, 13, markets start to fall. Because of that, because we are aware of the influence of the dollar index on this pair, we just want to master the DXY so we know what to do here. So the reason why I've said where is DXY now is because I saw a good demand on the H4 time frame. It was fresh, it was perfect, it was pure, it was yummy. But if there isn't a correlation, right, somewhere there, if there isn't a correlation at all with the actual DXY chart, what's going to happen is this H4 demand area is just going to be a joke. It's just going to be a joke. And so it's got zero confluence on the daily time frame, right? That's why I don't trust it, number one. And number two, I'm saying to myself, well, look, man, find out where the DXY is, because it kind of like sits on top of this area of competition on where I would begin to draw a daily demand. It's not inside the daily demand, but it sits on top of it, right? So a big part of me feels like, yeah, sure, this might be a very good place to bounce, right? But where is DXY when that happens? So if you're like me and you like to set alerts and all that kind of stuff, you just simply click right click. I do that on my actual trading platform, but you can do it on TradeView as well, and you can put in the two values, blah blah blah. And if you've got email notification and the app, which I have, and you've got a pro account, it does all sorts of things. And you'll be like, look, man, check DXY, right? Potential buy trade, right? You don't have to buy it, right? Buy trade. And then you're like, I don't want to put a pending order right now because it might not be safe. Then you write your message to yourself, look, where is DXY? DXY, right? Like if it's at a daily demand number one, then buy DXY, buy USDCAD. But if it's not, then be careful, right? I'm not going to create an alert because I do all my alerts on Mondays. I really want to be sober minded. Right now I feel like because it's a war room, I'm rushing through, but that's literally the idea of what my charts would look like by the time I'm done with them on Monday during a trading week, right? But you can see markets are closing lower, breaking lows and all the stuff. So there's a lot of sell pressure right now as institutions take profits off dollar positions. USD, Swiss franc, the next one. I've enjoyed doing this with you guys. If you're still with me, I saw some of you, I asked you guys in the last video, please make it till the end and write the words visualization. I appreciate that, right? I just want to know if this is useful to people. That's why I ask these questions. I want to know if there's engagement. Because once people get comfortable with free information and they take time for granted, I need to know so I can do other things with my life. Like if people, so I appreciate that level of engagement, guys. I really do. Right. So, USD Swiss franc, will come back to these notes that I've written down for you. Right. You can see here. All right. This to me would have been considered a stop loss hit if I was in a sell position. Right. Unfortunately for me, I've really been more trying to buy dollar pairs, but if you try to sell, you've been hit. Of course, there'll be justification of why markets, went a little bit high there, but damn, that is cold and unfair. On the weekly time frame, markets are showing like substantial, breakdown, bearish engulfing pattern without even taking the time to get it tested, right? There's no retest, no nothing. So you can almost be guaranteed that maybe that might be, a theme one day, all right, a theme one day. Then if we come to the daily area of value, I've got an order block that I've highlighted, and I write high risk, no trade. For you, maybe it's different, but for me, I don't care. No need to. Why? Because it's too close to the demand, and I know the dollar has a long way to go to the daily demand, right? So number one, I know DXY is nowhere close, but this demand could work only because we saw that on the weekly time frame there actually isn't a retracement on this chart. So markets could want to level up a little bit, move up, just to take more sell orders to the downside. All right. But when I was looking at this governing time frame, and I realized, and also when I was looking at the stop loss hits that were during my break, I had a couple of trades that actually hit stop loss from the war room, which I'm going to do in a separate video tomorrow. Otherwise, it will make this war rooms very long, right? The results, profits, losses, transparency, all that kind of stuff. There's a pattern going on in the markets where this is happening, or it happened at least more than 3 times to me. So for me, that becomes a red flag, because if I have 20 clusters, I need to ensure most of the time that I'm winning about 15 out of 20 trades. And if I get 3 of the similar thing happening, then I can't make any more human errors, right? Because there's always going to be human errors and losses in the markets, but I need to understand why. So when I was mapping out this potential trade idea, given that happened, and I'd seen it happen, across a couple of other assets that I'll discuss once again in my video for you guys tomorrow, I found this interesting. Right, so what I did, number one, is I marked out my area of value right there. But you can see it says, show them why the SL is there, my thinking process, right? So I'm going to delete that. And my thinking process is this, guys. If we take this trade, let's just remove the no trade. Let's say if we take the high risk trade. There are many high risk trades that work out, that I say are cowboy trades, blah, 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 and people make money from them. That's the whole point of it being a high risk trade. I don't know if it's going to work out or not. Right, I just know I trade what I like to trade, that are stuff that I'm in control of, like that's aligned with my rules, right? So we've got a nice clean break of market structure here, and I'm looking at this as a continuation. So essentially, I'm saying maybe you buy there and then we come down, right? So maybe that's what's going to happen. I don't know, right? So first we get a hit here, maybe markets take time, maybe markets come back here, they weaken this demand, and eventually we get triggered, then we come down, right? However it's going to work, that's my mindset, right? But what I then realized was, geez, the governing time frame would have taken out my stop loss there, right? The governing time frame would have taken out my stop loss, and I wonder why. So I look at the daily time frame, I'm like, okay, all right. So normally speaking, and it's something to move forward with, guys, because when you see tomorrow's video about the trades that hit my stop loss, it has nothing to do with wrong direction. I was just looked for. The institutions found me sitting there with my hands, with my pants down, as the saying goes, right? The direction was accurate, money could have been made, but the stop loss placement was too tight. So normally this is how we do it, right? We look at the daily time frame, we kind of like, if the markets change a little bit, just change with it, man. It's a dance. There's my entry point there. Then I went to the H4 time frame to understand what I see, and I was like, yeah, this is very good. So remember, this is the breakup structure line. Let me remove it, right? So you can see there, we've got a clean stop loss and a clean entry point that's mirroring the daily entry on the H4 time frame. And I was like, okay, let's go one more time frame deeper, the H2. And I was like, damn it. So now all of a sudden, I find a new order block that actually is a bearish engulfing pattern. So it's actually technically very strong. And markets have actually used it a lot, significantly, to drop from, right? So markets are probably not going to forget those sell orders there if there are any left. And so that means to me that I have to include all of this in my analysis. And the reason for that is, well, markets could fall from this area, but before they fall, they could go all the way up. And if markets come all the way up past this first zone, anyway here, and my stop loss is here, stop loss is there, stop loss anyway here, I'm going to get found out by the markets. I'm going to get chopped, right? So I've had to, so that was the thinking process and why the stop loss is a little bit higher. So it looks like this on the daily time frame now, right? You see there, we've got a slightly wider healthier stop loss. And this is not just from USD Swiss franc. The other 2 or 3 charts that I'm going to talk to you guys about tomorrow, the same thing happened. Outside of the daily supply like this, markets chose an H4 supply just above. That had no confluence with nothing, but the mere fact is I was punished because that supply was above, right? It's 90 pips for me as a swing trader. I'm cool, I'm easy, right? And if you don't like it, remember, you can always just wait there. You can always wait there, right? You can literally, trusting if you're like me and you're very convicted that price is gonna, you know, come all the way there to look for money and liquidity, whatever, then why not just wait up there, right? The reason why I don't do that and I don't care for it is because I swing and my risk reward ratio is good enough. So if I'm gonna risk 90 pips, I better bag 180 pips just in case, and I'm fine with the distance between the fall and the next time I want to buy, right? It's almost 400 pips, which puts me at an incredible risk reward ratio of 1:3, almost 1:4. All right, so that's why I'm entering there. Okay, just so we're all clear, full transparency right there. Right, so that's USD Swiss franc, you know, mapped out in the bag. The next one and the second last chart for the day is Euro USD. And this is gonna be for just students only. 365 traders. Inside our private Telegram group, which I know, you know, been a little bit quiet on, but I'm enjoying the conversations, guys. Wongi, I don't know if you're watching. Wongi, say hi if you're watching. And Trevor and a couple of people. I think Trevor just did one chart analysis on the stuff. There was something that you guys shared on the private Telegram group. Someone was sharing like internal orders of banks. So basically call options. I'm gonna do 3 big videos on that. Remember, I promised you guys. I know you guys think I don't keep my promises. It just takes time to back test a lot of this stuff. I promised you guys that I was gonna look into that thing, see that data, see what they're doing, and then back test it for you, and then teach you how to use it properly. Remember that, right? So I'm now in week 4, sorry, of back testing that stuff. And this is interesting because there were call options for the 9th and 20th of May on Friday, about a few days ago, 9-10 days ago, which was actually the beginning of this crazy rally, right? But you know, I'll discuss more. And then from that particular order flows, I'm just talking to my students just for 2 seconds. If you're not a 365 student, just bear with me. From the particular order flow list that we get, Trevor did one for USD JPY, he had the data, blah blah blah. But from that particular order flow, the only big orders that they had 1.3 billion, 1.1 billion, 2.8 billion, 3.1 billion are all the way up here. So there's almost nothing in the center. All right, and so this has been fun to kind of like work with, and I'll talk to you guys soon, maybe this week, the pros and cons of using that data and how to use it properly. But you must understand call options first. That's the main thing. All right, you must understand call options first. Okay, now back to every single person. Thank you so much for being patient. Euro USD, just from a war room perspective, you know we're going up. Why are we going up? Because I told you so. No, I'm joking. Because risk sensitive assets are winning for the last 2 weeks, and it helps a lot that, you know, the interest rates cool off according to speculation. Is going to slow down a bit due to, you know, FOMC and all that kind of stuff. So anyway, euro was in a 3-month demand after breaking a 1-month demand, right? I was a couple of war rooms ago of the mind to try and sell. This is a risky area of value, but I'm most likely going to try anyways. But it makes no sense if markets get here and the dollar is still falling, right? So euro is going up because the dollar is still falling. So if dollar gets here and markets are not yet at a daily demand on the DXY, I won't sell. Instead of putting a pending order here, I'm going to put an alert to go check to see what the hell is going on, right? But you can see markets are already accumulating orders. There's a high chance that the dollar isn't going to fall as quickly as I want it to be. There's a very high chance that one day, you know, this might be a very good area to have come back to try and buy again. So I'm changing my mind from War Room 61 because we're now very close here, right? So I'm looking more for this, right? So if you want to buy, then you really want that confirmation that dollar is still going to fall. and then we're going to sell somewhere there. And that's very similar to the same place we've been talking about selling for weeks. Very similar to the same place we've been talking about selling for a very long time. Very similar to those marked order flows that I just showed you guys on the other chart, right? So that's Euro USD right now. On the H4 time frame for a cleaner outlook, or maybe just show you on the Saxo chart, we have already mapped out. Then you want to see a healthy pullback. For me, this is the only healthy pullback right now. Right. For me, this is only H4 time frame. This is the only healthy pullback. If markets were to come all the way down here, I would be happy to take a very low risk buy. All right, a very cheap buy. That's Euro USD, ladies and gentlemen, and the last chart that we need to do something about this week because we finally got triggered, and I'm in a rush to break even and maybe even take some profits, is Euro Pound. If you guys go back to the war rooms, you'll see I drew these zones for you. Let's start on the daily time frame and I explained to you how big this area was. So there are two types of traders in my recollection and understanding. There is a type that used the daily entry like I normally teach, or the type that did what I did specifically for this war room. Right, in any case, whether you entered here or you entered a little bit higher, and we entered there because of that H4 time frame. Remember, guys, earlier on I told you that there was another supply that I was excited about, and I got burnt because markets are going higher and higher. So I'm going to wait all the way up here, and on the H4 time frame, and it happened. Right, markets actually came, quietly and silently within the daily supply. Beautiful confluence with another supply higher. That's why I was a bit reluctant, and unfortunately didn't use the type of lot size that I'd like to use if I'd been more confident in that area. But in any case, we've got a good win, got a good trade running. All right, so if you're in this trade with me, it's time to do something about it. It's very, very important. Like this is not a long. It's not going to be running for about 3 to 4 days, so it's not really like a big deal. But it's always good to acknowledge profits and see. So it's 1:2, and I am of the mind to break even. To be honest with you, part of me wants to close this trade completely, like completely take profits and then re-enter a deeper touch there. That's what a part of me wants to do. The reason why I don't want to do that is because of how it looks on the daily. On the daily, it looks like I'm just trying to trade the wicks, right? Trade the wicks, like everything is in here. Like that H4 touch was magical, but we're done with that, right? So I probably won't be doing that, but I definitely would like to break even just to make sure I don't lose any money. And just in case markets want to just reorient themselves with the higher sell. So something like that. Okay, that's what I am interested in doing. Just protecting myself so I don't lose any money. And then just in seeing if we can get another touch. So I will try. Because I'm now going to go risk-free here on this whole trade, right? Put my stop loss just above there. I'm going to try and sell again right there, personally, right? And then see how that goes. If it doesn't work, it doesn't work. Then I just lose a little bit of money versus, this long hold. Yeah, but the temptation to close is, it's just a temptation. I mean, we have a couple of areas to clear, but once we get back to free falling, that would be great. But it'll be all up to markets right now. Euro is a bit strong, pound is a bit strong, so we'll see where the chips lie here. Folks, my name is Leroy James Maisiri. I am the head trader of 365 Trading Academy. We have a very structured, well-built course that teaches you how to trade all the rules of supply and demand. A lot of people think you can just find an order block and trade. You are wrong. There are 8 types of supply and demands. If you don't know them, smart money concepts won't work for you. All right, they just won't work. Right, it'll just be another useless trading strategy that you do not have control over. So if any point in time in your life you ever want to learn how to trade properly, then check down the link down below. You've got 48 hours before we go off sale. Right, now I want to quickly do my traders framework, and this is where everybody runs away because people believe it's such a waste of time. People don't understand that you only trading with your mind, and because of that, if your mind is not put together, it is a waste of time. If it is the only time you affirm yourself is through my videos, then I'd like to give you a chance to do that right now. Every day, in every way, I am getting better and better as a trader. You got to tell yourself this all the time, right? I'm currently doing it 5 times in the morning. Whenever I go to the bathroom to stand up, I'm not allowed to sit more than an hour on my trading desk because my back gets really so easily. So when I stand up, I do my affirmations. If I don't feel like listening to music, I have myself recorded saying my full affirmations, and I put in a little bit of classical music in the background. And so that's what I listen to every single day. Every single day. Imagine the power of telling myself every single day, almost on an hourly basis, that I am getting better and better as a trader. And I whether I believe it or not, the more I hear this, the more I believe it. And I like where I am in my trading career, but I want to see what better looks like. And I think for those of you who are starting, for those of you who are regrouping, for those of you who are reimagining your accounts, this is where you need to be. You spend more time convincing, building the faith in yourself that you're getting better and better, because better and better means you're going to understand the rules. You're going to have a good strategy. You're going to follow it. Some of you are bad traders, not because you have a bad strategy, but you've got bad habits. Well, every day, in every way, you got to work on those things in every way. It will force you to get better and better, but you need to send this program to your subconscious mind. Your subconscious mind needs to start creating red signs. Okay, no. You're playing too much on social media. You haven't done 2 hours of chart work. Can you commit to 2 hours of chart work a day? If you can, it'll grow to 4. 1 hour in the morning, 3 hours at night. Can you do that? Every day, every way, you're getting better and better. Your subconscious mind will become more open to these ideas. Have you read the few books that Leroy begged you to read? Maybe there's something in there that you need that will help you. Which books should I start with? Definitely start with The Disciplined Trader by Mark Douglas. Then read Trading in the Zone by Mark Douglas. Then read The Adventures of a Currency Trader by Rob Booker. If you can start with those 3 books and map yourself out every day, in every way, you're getting better and better as a trader. And I don't feel like typing the entire affirmation, though I've done it before for you, you have it. But don't forget, the next thing you need to do in your daily affirmations is to plow yourself in a systematic process of gratitude. This is part of the hack in something called the universal law of polarity. When things are bad in your life and all you do is complain, when you blow an account and you blame everybody, the whole world, when it was you who over risk, it was you who broke the rules. What you do then is you tell your subconscious mind that this is a waste of time, because what your subconscious mind is hearing, what you talk, what you speak, there's supposed to be a mouth, by the way, the negative things you say about your trading on a day-to-day basis. Not only that, folks, the negative things you say about money are competing with this affirmation. Your subconscious mind is listening to the vibration frequencies of your voice, and if you're saying more bad things about yourself, trading, money, markets in general, then you are loudly affirming yourself. Your subconscious mind will choose a program. It will choose what is known as the most dominating program. The most dominating program of the mind either is a trader that's getting better and better every day in every way, or a trader who isn't. Okay? You can't cheat the system. I appreciate you. Thank you for watching. Please don't forget to subscribe. Don't forget to share the video. Let's see 5, 10 people share the video this week on their personal page and say, hey man, if you're a trader and you want to learn how to make income, check this out. This is free information. Just share it. Don't forget to like. I appreciate you. This week, please do pay attention to the channel. There's a lot of stuff coming out. I'm ready. I'm back. All right, 365, everybody. Shake my hand and do have yourself a wonderful time. Peace. I'm out.